Okay, guys, we are here. We got the FOMC decision going live at 2 p.m. Honestly, the market is genuinely like running pretty significantly here. Not quite at all-time highs yet, but close. We'll see if the FOMC decision propels us closer. Yeah, we'll see if we start testing these highs. We kind of have like a cup and handle pattern forming. We got the FOMC decision live at 2 p.m. today. You can see the economic reports we had earlier that came out. We had payrolls, prelim ADP payrolls at least show up. You know, a little bit weaker than expected here. And so, or no, a little bit stronger than expected. We had GDP show up noticeably stronger than expected at 2 p.m. Eastern Standard Time. And we're kind of taking a couple small trades here, but waiting for this FOMC to really kick off. You know. And let me check the chat. How you guys doing? What's up, Greg, Womble, Pawn, Carr, Selena? Good afternoon. Let me get some music playing. I'll get some headphones up, and we will listen to what Big Papa Jerome Powell's got to say regarding everything. Make sure we get this connected here. We'll get the music. Here we go. We are in here. We got a music thing up. Okay, we got our tickers forming. Got a plan here. And again, I'm going to do a poll here. Let me know what this, will Powell be hawkish or dovish today is really what I want to know. I think it honestly could go either way here. I'll show you the small position we have up right now, but it's pretty small in the micro. Cut a little bit off right here. See if we can fill the limit order. There we go. Keep cutting a little bit more off. We have small contracts here. We'll just let the rest ride. I think Powell, my guess, and again, it's just a straight up guess because you never know. My guess today is that Jerome Powell will pander to the president, but not through rate cuts. My guess is that he will have a hawkish pause today. Here, we'll do a poll here. What decision, rate decision, does the FOMC take today? It's only going to be two options: pause, cut. We're going to do pause and cut. We're going to keep it easy. What rate decision does the FOMC take today? Pause or cut? I mean, you know, it's like 99 to 1 right now. If we take a look at rate odds, you can also take a look at yields if you want to like get an easier look at it. The rate odds for today are, last time I looked, they were 99 to, okay, so it's 97 to 3. So we've actually got a little bit increased odds of a cut today, although it's still not very probable. You know, it's about 3% likelihood. It's better than the 2% it was earlier. If we take a deeper look at like bond yields as an example here. Bond yields today so far have spiked, mostly showing a higher interest rate, hawkish, restrictive sentiment. The bond yield's at 4.36% right now, 4.36%. And yeah, we'll see what happens here. We added one more little micro to this, but I just want to let it come down to ideally I like 520 right here. But you can see in video, we also have Microsoft and Meta earnings. There we go. Nice little breakdown we're getting. Take some off there. Hold this last little piece of it. Hey, afternoon, BT. I have an argument for rate cuts. I work for the largest plasma donation company. We have 4 times as many people coming in trying to get extra cash for their plasma. Yeah, I mean, I understand that. But I don't necessarily know if that's an argument for rate cuts like you think it is. Okay, so like an argument for rate cuts would be economic weakness or price stability. If inflation is causing problems, that's an argument against rate cuts, not for it. And I would argue people doing that is because of inflation more so than economic or job labor market weakness. So I think that's actually an argument against rate cuts. It's not a good one. It's too specific to your own situation area. And so yeah, just a heads up there. Airbus CEO says it had 60 completed airframes, still waiting engines. We'll put a timer up for the decision. We still got a while. We'll put a timer up. Got about an hour and something minutes away. We started a little earlier today, just so we can kind of hang out with you guys. But yeah, hour, 22.5 minutes, give or take, is what we got. Here's the rate decision right here. So that's why we're trading a little bit here. We're shorting this right now, so we're actually green in this position. We're gonna cover a piece down there. If we can continue to spiral down here. Ideally, I'd like 521 is kind of like my final exit. Maybe I can hold on to this little piece, either break even or to that specific spot. Looking at our poll number, 71% of people think we're gonna pause. I'm surprised 30% of you think we're gonna cut rates today. Like, I know you might want rate cuts, and I think there might be an argument for a rate cut. But you guys know wanting something and something actually happening is a different thing. I think there's a lot of confirmation bias in these votes. I'm not against you. I hope I'm wrong. I hope I eat my words and we cut rates. I certainly think you could justify ending MBS QT right now, if you know what that means, like MBS quantitative tightening. So the last time we got an update on QT, essentially they reduced Treasury quantitative tightening, which is a hawkish restrictive thing, but they reduced it 80% by 80%. But they continued mortgage-backed MBS or mortgage-backed quantitative tightening at full steam what they were previously, which is keeping mortgage rates higher. And so I think you could certainly justify ending MBS quantitative tightening or QT in general. It's a more dovish thing. I think you could justify a pause and then ending that, or I think you could justify keeping that and doing a 25 basis point cut today. But it's 97-3. Yeah, I'm just gonna get out here, maybe re-enter somewhere else. I just don't know if we're going to see that type of cut today. I just don't think it's gonna happen. And again, let me know your argument for it. I'm open into listening. We do have Meta and Microsoft earnings after that. So we have Meta, Microsoft. Meta's kind of flat leading into their earnings. You can see Nvidia up there close to all-time highs. Microsoft at 513s. We do have Meta and Microsoft earnings today. That's interesting. But people might need extra money because of inflation, so that means no cut. Right, exactly. That's kind of my point too. You got to understand, what opens the door for rate cuts is price stability, like low inflation, as well as economic weakness or signs of economic weakness, And so I don't think we're at either of those things yet, necessarily. I think Powell had a good talk with the president, so the president said he won't do high tariffs if he cuts rates. Maybe. Maybe they got some secret deal that we don't know about worked out. I feel like something would come out about that type of agreement, though, already. Again, you got to look at the big banks. Dude, my eyes just keep on twitching, bro. I don't know why. Drink some water. All right, so I'm looking at this 525, 520 level. Could be 525, might be. Do me a favor, hit the subscribe button, hit the notification bell. We appreciate it. We might get a surprise cut today. May have applied the right type of pressure. Well, I don't think we're going to get a surprise cut. I think what we're probably going to see is a dovish, optimistic Powell with a pause. So I think we're going to get a less restrictive Powell with a pause today is my guess. I might be wrong. But, I'm not going to be upset if we cut. I'll eat my words and make fun of myself for being wrong, wildly wrong. And, you know, I kind of joked around about people who said that we would cut today might not know what they're talking about. But if I eat my words, top 3 worst predictor of all time today. Yeah, September is when we're going to cut. Most likely as of now. It's always subject to change. Like, we got GDP stronger than expected. It actually reduced the September odds this morning when it came out. And so the odds for a September cut actually got reduced earlier. So yeah, we'll see. Again, we got the full FOMC decision live here at 2 p.m. I'm going to make the... All right, so we got this here, full FOMC decision and press conference live, 2 p.m. 97% likely we pause today. 97%. Let me see if I can move it. There. All right, so look at where we bounced. My level held 520. We already are rebounding at my level. I got to trust my level some here, especially if we haven't hit one in a minute and we pull back to it. Look at that bounce. I got to trust my levels a little bit more. All right, we're starting to rebound. SPY at 630s. And again, just to look at things, right? Just to put this into perspective, if you want to know kind of what's happened here. 2020. I've gone over this a few times today, but it's FOMC day, so that's all right. So we had 2020. Say this graph that I'm about to draw is rates. 2020 happened, and the Fed said, oh no, if we don't lower interest rates and stimulate the economy through a lot of other measures, we might go through a recession or depression. And so the Fed brought interest rates down to almost zero. Let's say this is zero right here. They brought them down to almost zero, virtually zero. And then they kept them there for a few years. By the time 2022 happened, all of this economic stimulus right here caused inflation to spike. So if you look at like a CPI inflation graph at this period of time, you can see 2020, what happened in 2020 here. Here's 2020. This is CPI inflation. CPI spiked to almost 10%. Here's 10% here. It got up to like 9.1%. PCE inflation spiked as well. You know, prices spiked. Supply chain problems. The economic stimulus, quantitative easing, stimulus checks, lockdown, supply chain problems. It all caused inflation to spike. And so at that point in time, after all this stuff happened, the Fed has to get restrictive. And so then they raised interest rates a lot, like 450 basis points or so, I think it was. And they did this to combat inflation, because the more restrictive they are, the less expansion in business, the less spending happens, you know, and ultimately it combats inflation. They also did quantitative tightening during this phase too. So they removed liquidity from those markets, reducing, you know, they reduced their balance sheet, kept interest rates high, and then they paused them like this for 12 months, right? Then at the end of last year, they reduced them by 100 basis points. They did a 50 basis point cut in September. They did 25 in November and then 25 in December, which again, that benefited the current administration, right? It's not like, oh, you know, there's a lag to interest rate decisions and the effects of them. They directly impact adjustable rate loans, home equity lines of credit and stuff like that, but there's a lag, especially with like mortgages and everything else. So they reduced them by 100 basis points, and then we've been pausing since then. And here's where we are now. That's essentially where we are now. But the inflation that happened here, I go over this a lot, but the inflation that happened here is what everybody's pretty unhappy with regarding price. 5-year period, inflation went up 2 or 3x in a lot of industries. And so that's why people are still unhappy to this day. And now we're looking like we're probably going to pause. You know, the hawkish stance starting in 2022 the Fed made did reduce inflation. It slowed inflation. It didn't actually make inflation go down, because inflation doesn't go down unless we're in a recession like 2008. That's the only time in that you actually see inflation prices literally go down on average. Most of the time we want to just slow them down like this right here. We just want a reduction in speed at which prices go up. Price stability. And so now here we are. We reduced them by a full 100 basis points last year. A lot of people are arguing for cuts now. We're still doing quantitative tightening in some ways. And that's where we are now with markets. Markets have been breaking all-time highs. GDP's at 3%. Payrolls are higher than expected this time. Jobless claims have been better than expected, although jobless claims are expected to spike a little bit higher tomorrow for the previous week. And that's where we are now. And so again, let me know what you guys think we should do. I think it's somewhat ambiguous. I don't think the decision's easy. I don't think it's obvious at all. I think balance is probably the best move. I think you could probably argue a 25 basis point cut, but I think you could also argue no cut and maybe like a reduction in QT or an ending QT. I think both of those things are okay. And what I'm curious about today is see if we get an update on that. Yeah, that's what I want to know, is whether we get an update on the QT state. I mean, there's a lag with everything. The only thing that rate cuts are directly influencing is occasional adjustable rate loans, home equity lines of credit to some extent, but there's still a lag even with those. Technically, what the federal funds rate is the rate banks charge each other to lend money overnight, but there's always a lag for sure, and so it goes, for mortgages, it goes from cuts to yields, mortgage rates, right? Okay. Yeah, gotcha, Pawn. All good, brother. All right, looking at our poll numbers, 68% think we're going to pause. 32% of people think we're going to get it cut, which is crazy. I would never imagine that 30% of people, a third of people, think we're going to get cut rates today. I think that's wrong. I think y'all are wrong. But again, maybe you're not wrong. I don't know. It's possible either way. Look, I want you guys to understand something here. Every president wants a low interest rate environment. Every single president ever. Unless they're dealing with maybe like the early 80s. That might be a little different. Outside of that, whomever that was, I have to go back and check. Was it, he recently passed away. What's his name? I can't think of it. But the early 80s, maybe the only presidents, plural, potentially, in history that did not want low rate environment. Most of the time you do want a low rate environment. Why? Because low interest rates stimulates the economy, and that causes the economy to thrive, and that's a bragging point for presidents. Even the current president today bragged when Q2 preliminary numbers came out at 3%. And so every president wants low rates. I can't knock them for it. I get it. I understand. Carter, yeah, that's who I was thinking of, but yeah, I do see the head and shoulders on a 1 minute chart. Look, here's the head, shoulder, eventually. If it's right, though, it means we'll go down, but you never know. I think we're, again, I told you guys this morning. What did I say this morning? I think we probably get choppiness. And I mean, since this morning's happened, we have gone down, up, down, up, down, up, down. Slight upward trend here, but not like anything major or significant. The first one's right. Cheeks. Fed's going to announce it at 2 p.m. and then at 2:30 they're going to do a press conference. They're going to put out a statement at 2 p.m. announcing why, and then they're going to follow up on that statement with a statement by Jerome Powell, question and answer press conference by Jerome Powell. Is it hawkish or dovish? How will the market react? I think the market wants lower rates. And so I think if Powell is dovish, meaning pushing for earlier or more justified rate cuts, more probable for us to cut rates more times than expected, less restrictive, I think the market will react positively to it. I think if Powell announces that he's ending quantitative tightening, the market will probably react positively to it. But it's never a certainty, and it can always go the other way. You know, there's so much variance with not only how the market reacts, but what his tone is going to be. He could go the other way. He could be restrictive. Say, we don't need any rate cuts. Look, we got 3% GDP and price stability. We're not cutting rates this year. If he says that, I think the market's going down. But I think a dovish Powell, as well as a data dependent, like not really giving us any outlook Powell is more probable. Not really giving us any real hard concrete path is more probable. Then we're gonna wait and see what happens. I think one of those two things is more probable. I think the current president has put pressure on Powell, but I don't think Powell's going to cut rates. Powell is usually pretty balanced with things. He doesn't like to make brash decisions, and I think the market will react in a brash way if we cut rates today, on the upside or downside. It's hard to predict, but if we end up cutting rates today, I think the market is going to react in a big way from it, and I think Powell understands that, and so he's not going to do it. So that's what I think. Gold, on the other hand, taking a look at gold here, we got Tesla up, we got Microsoft. Gold is down a lot today, probably from the 3% GDP and the higher ADP payroll numbers that we got this morning. Gold's really down. Apple's turning down too. If you take a look at Apple, Apple's turning to the downside as well here, testing these lows. But low rates are not a luxury with 37 trillion in debt. The Treasury will have to print over $1 trillion more per year in order to pay the interest at current rate. Trueflation is at 2.4%. Yeah, I mean, I understand what you're saying, economic sigma, but I think inflation benefits debt as well. You know, like at least it erodes buying power of debt over time. And this is one of the reasons the U.S. is so willing to get into the said debt, is because let's say we run at 3% inflation a year and you owe, let's just say it's $1 billion. We owe much more than that. But let's just say it's $1 billion and it erodes by 3% yearly, compounding over a 30-year period. 1, 2, 3, 4, 5, 6, 7. Okay, so that $1 billion is only going to be about 400 million in buying power, a little bit less than that actually, if we run at 3%, 2.5%, which is kind of like an ideal situation. You know, there's going to be some years, almost certainly in the next 30, that are going to have much higher inflation rates, because you never know what happens. And so inflation will erode the debt anyway, to a certain extent. But, you know, it's not a perfect science. Alright guys, we got almost 600 people here. Do you think the dollar index short squeeze happened from European rate pause until 2 p.m.? Dollar index has more legs down, I think. Yeah, I mean, the Dixie is up. But, you know, I always try to tell people this. If you look at a long-term chart, the dollar index is pretty flat over a 5-year period of time, you know. So, I don't know what the dollar index is going to do. Me says, good to see you, man. So many years. You are here. I'm always here, brother. Any news on negotiations with China? We got some updates on that this morning. Airbus is expecting to open up a second China assembly line this year. But let's see. All right, so the U.S. did impose sanctions on Alexandra de Moraes of Brazil. Forgive me if I mispronounced that. If you're Brazilian and you're mad at me, just know I train BJJ. So, you know, you can't stay mad at me because, yeah. All right, so the president said he's going to sign into law the Veterans Affairs Home Loan Program reform bill today, according to Bloomberg. I'm not really seeing any updates on China. I know they met in Stockholm. Both of them said they were constructive, but we didn't actually have any hardline deals made. I'm pretty sure they're probably just going to push it back. They're going to do another extension, is what I'm guessing. How long? There might be a timer on the bottom left of the screen. Hey, what's up? Organic pump incoming? Maybe. Alright guys, hey, we got 600 here already. EA and W is interesting. Do you guys think we move up from here or we head down? I think the trend is sideways but slightly bullish, and I think we're kind of moving up to test. I think if we get good stuff today, we could go to all-time highs, but we'll have to wait and see. All love from India. Hey, what's up, man? Hey, welcome, brother. Welcome. Microsoft currently at 512.70s. Microsoft does drop earnings today. I have to turn this light off, dude. It's kind of... I'm noticing that... A little bit better. Not really much difference. Market wants to move up. Any good news will push it up. Yeah, I mean, I think the market wants to go higher. All right, guys, we got a little bit over an hour left here for this report. A little bit over an hour. What price would you start shorting Newegg, the tech website? I mean, I'm not a big shorter of blue chips. Newegg's trend is terrible though, but when it runs, it really runs. And so I don't know. I'm not a big shopper of Newegg. I don't really know much about it, and it looks to be okay. Like if you look at this trend, it looks like it pumps and then fades, pumps and then fades, pumps and then fades, pumps and then fades. The question is this a big enough pump, or do you think it's gonna go higher? I don't know. I'm not messing with that. It's just not really anything that I'm really wanting to get involved with. Speaking of shorts, GameStop's still over $20 a share. It's been holding since the beginning of last year. Apple tested 209.50s. NASDAQ did bounce at that 521 level we drew on our chart. We do have Meta over 700 today, leading into their earnings. You're awesome, dude. Thank you, beer. Dovish, hawkish mean? Dovish means loose. Dovish means they want lower interest rates. Or they're dovish means less restrictive in terms of rates. Lower rates is less restrictive, higher rates is more restrictive. A restrictive Powell would be a Powell that wants to raise rates or keep interest rates high in one way or another. Through quantitative tightening or just straight up rate cuts, rate decisions. You know, a dovish Powell is one that wants to bring interest rates down or thinks we need to bring interest rates down. So dovish means low interest rate environment. Hawkish environment is a high interest rate environment. Restrictive is also another synonym for hawkish, and loose is another synonym for dovish. SoFi, yeah, SoFi ended up running from their earnings, right? Didn't really hold the gains though. Went up to 25, back down to 20s, and now it's at 21s. What's up, Mama Pawn? Yeah, Spotify earnings tank the market. Again, we got the FOMC rate decision going live pretty soon. Less than an hour now, guys, for the FOMC decision. We'll see what we get. Hit the like button, hit the subscribe button. What's up, Blaze? Pepe, meme coin, don't know anything about it. Not really my style to trade meme coins. Although you could probably, if you can, it looks like meme trading and meme investing has to do with data. Like what tools, if you got the tools to gauge momentum early. And so it's about knowledge and tools. If you have the tools to gauge momentum early, you can capitalize on some of those meme crypto coins. But again, I have no idea how to do that. That's not really my game. So good luck if it is. Make your money. I'm not mad at it. All right, Nasdaq's moving up, testing the highs of the day, just under 550 here. I'm gonna draw a level right at 550. Maybe put like the SPY up right here too. SPY is testing that top of the range. I put NVIDIA up here as well. NVIDIA at 179.20s. Super Bowl of trading, kind of. Kind of is. I would argue just a base rate decision on that's most likely going to be a pause isn't really the Super Bowl of trading. Maybe when you combine this with Microsoft and Meta earnings today, that's big. But it really depends on, you know, the reaction. I would argue like maybe our first cut after a long pause in rates or rate hikes or stuff like that, that might influence markets a little bit more. The market looks like it tends to want to go higher though. So all right, guys. Airbus opening up a second assembly line. U.S. imports of consumer goods have dropped almost 50% over the last 3 months, which is the largest drop on record. It's about 44% drop in imports of consumer goods. As a result, consumer goods imports have gone down to almost 60 or to under 60 billion, the lowest in 5 years. It comes after the largest 3-month increase in history at 43% to a record 103 billion. So what this means is that companies were front loading inventory ahead of expected tariffs in Q1, and now things are kind of going back to normal. In June, they declined almost over 4% to 264 billion. I'm reading the Kobesi letter, but yeah. Again, 97% chance Powell does not cut interest rates at today's FOMC meeting. Powell about to cut some pauses. Again, looking at our poll, out of 500 plus votes, 68% think pause, which is kind of shocking. 32% think cut. Again, for those that think we cut rates today, I'm not against you. I'm not saying you're wrong even. You probably are. But I'm not saying you are because nobody knows. But for those of you that think we're actually going to cut rates today, please explain why in the chat. Genuinely curious. I think it's a good conversation. I'm not mad at you for doing it. Maybe I'm wrong and we don't cut rates. Or maybe I'm wrong and we do cut rates. Let me know your argument for rate cuts in chat. Again, if you think we should cut rates today, let me know your argument in chat. If you think we're going to cut rates, even if you don't know if we're going, even if you don't think we should cut rates, if you think we're going to cut rates, let me know in chat right now. I'm curious. They ain't cutting, sadly, no reason. Maybe in September, but I doubt it. Say what? What's up, freaky tats? Not gonna cut it all. The president's pressure. Okay. That's an argument for sure. That's definitely an argument. If we do cut rates today, it's going to be from Powell and the president having some type of secret deal. You know? But I think we'd hear rumors and we'd hear other members of both sides come out and put a little bit more influence into potentially cutting today. Like I think we'd hear rumors of that, and I don't think we have, you know, but maybe we do. I don't know. Where's the option to say they raise rates? They're not raising rates today. If they raise rates, if they raise rates, the president would freak out, of course. Like that would be, again, we're not going to raise rates and then cut them next month. Like that's just not happening. Neither of those. We're not going to raise. We're not going to cut today, most likely. Last 6 months, there's no inflation. Was there really no inflation the last 6 months? What is the average CPI inflation month over month reading over the last 6 months? See if AI can handle this for me. All right, let me use AI. Has it really been? I don't think so. But, I think you're wrong, but January 0.5% gain prices, February 0.2% gain, March negative 0.1%, April plus 0.2%, May plus 0.1%, June plus 0.3%. So we've been gaining about an average of 0.2% per month in inflation over the last 6 months. So if on that average, we're up about 1.2% in 6 months. That's something. That's inflation, you know. Apple breaking lows again here on the day, still falling. Data-wise, with regards to the Fed's dual mandate, there's not much of an argument for a rate cut. Yeah, I mean, we've had 3% GDP for Q2 for the advanced estimate. We did have negative Q1 GDP. If we're talking about an argument for rate cuts, and if I had to make an argument for rate cuts, this is what I would say. I would say rate cuts need to be proactive, avoid recessions and depressions, not try to steer us out of one once we're already there. Okay, that's my first argument. The second argument would be Q1 GDP is negative. You know, the third thing would be we're still doing quantitative tightening, especially in MBSs. And so we're still restrictive in a lot of areas, which, you know, we can justify a 25 basis point cut. Inflation has been somewhat stable. It's been under 3% for an extended period of time. Let's cut rates, right? Like that's what I would say. I'm not saying I agree with that, but that would be my argument if I was pushing for rate cuts. If I was not pushing for rate cuts and I thought we should not cut rates at all, I would say inflation has been incredibly elevated over a 5-year period. People are generally unhappy from that price increase dynamic of the last 5 years, and because of that, we need to be incredibly careful not to spike inflation again under the context and landscape of the current tariffs. I would say GDP is 3% for Q2. Payrolls are still strong. You know, that again, I'm not saying I agree with that either. I'm somewhere in the middle between these two arguments. But again, as I've said many times, I think the right decision today is somewhat ambiguous. As long as we don't rate rates today, raise rates today or cut 50 basis points. I think 25 basis point cuts arguable, and I think a pause is certainly arguable as well. All right, guys. Nasdaq still bouncing up. We still got 50 minutes left until the FOMC decision. 50 minutes. Hit that like button, hit the subscribe button. Again, I'm not against you, regardless of which side of the political spectrum you follow on. I'm not against you. I'm just neutral. He's not cutting today, Tracy. He might cut September. Yeah, I understand truflation. Tell us why he shouldn't cut. I've already given my argument against it. I've given you my argue for a rate cut as well. I think you can justify a 25 basis point cut today, just to clarify. I think why we shouldn't cut: tariff uncertainty. The last 5 years, prices have been pretty crazy. We need an extended period of good price stability. Once inflation spirals, it can spiral quick. And cutting interest rates is going to cause that to be more of a risk. Although as long as we don't do any type of economic stimulus like quantitative easing, it's less of a risk, but it's still some risk. As well as we're also still doing quantitative tightening. And so you can balance it with a 25 basis point cut today. But you know, I'm not saying I agree with that. That's just, I'm giving you guys both sides. I think it's somewhere in the middle. And I think anybody that acts like it's incredibly obvious, they don't like. I talk to people and they're like, yeah, we should cut today. I'm like, okay, well, what's your argument for it? Silent. And so I'm not against you. I'm curious if you do think we absolutely should cut today, that it's super obvious. Why? Again, I'm not against you. And again, I'm listening. I don't know everything. There's certainly a lot of stuff I don't know. And, you know, sell me on why we should cut today. I think you'd probably argue one. They can go with quantitative easing without cutting, though, right? Yeah, and we should never do that. Why would we do QE right now? Where's the economic weakness to justify it? Where's the labor market weakness to justify it? QE? That's going to make inflation spike more than just lowering the federal funds rate. That's an argument, Tracy, for sure. The last 3 years, credit card debt has increased. Yep. I agree. I think that's a reason, you know. But is that from labor market problems or inflation problems? You know, I'm just asking questions. I'm not really siding with either one. Again, like I said, I think you probably argue a 25 basis point cut today. I think in order to do it, you'd have to, you know, balance it with, you know, other stuff, but I'd be okay with 25. I wouldn't be mad if they surprise cut 25 today. I'd be mad if they did QE or something like that. Would an emergency cut send the market up? I would argue probably, but it would also show fear maybe. But it probably would, just because I would think if we have an emergency cut today, not an emergency, it wouldn't be an emergency cut, it would just be a cut. Emergency cut would be if outside of the regular FOMC rate schedule, Jerome Powell was like, yo, we're cutting rates this Thursday randomly. That's an emergency cut because of X, Y, Z. It wouldn't be an emergency cut, it would just be a cut, I think. But if we do get a cut today, a surprise cut is what we'll call it, which is a surprise. I think it would be because Powell and Trump did some type of deal. You know, I think Trump and Powell did. If we do a cut today, it's because they worked out some type of deal behind closed doors. Yeah. But again, with that said, 97-3 odds of a pause today, so I don't think we're gonna cut. And again, here's the Fed funds. Here's the Fed funds rate over a 10-year period of time. Again, here's 2020. Bringing interest rates down to try to save us from the looming problems that would, you know, happen in the year 2020. Everybody knows what it was. This is when inflation started to spike and the Fed turned restrictive. So they raised interest rates a lot. Paused them for a year. Cut 100 basis points, 1 full percentage point at the end of last year, and then we've been pausing since then. That's where we are now. But in terms of rates, right? If we take a look at a max chart, this is where rates are now. This is the average is probably somewhere around here. Maybe I'd say maybe the average is like here. So I'd say we're still probably below average in terms of the last, what's this, 85 years? 90 years, 100 years. I'd say rates are still below average. Currently at 4.33%. So we were at 5.33, and then we cut down to 4.33 last year. Being above 2.5% above neutral is reason enough. Maybe you're right. Am I correct in reading more of a positive sentiment around markets? I would say to a certain extent, yes. I think it looks pretty optimistic, bullish. Markets are up. I think a lot of stuff. I think the markets have been really easy to trigger a bullish sentiment lately. I think GDP came out this morning, was positive. ADP payrolls were positive this morning, better than expected at, what were they, like 104, 105,000 versus 75, 77,000 expected. So I think the sentiment is up. I think we got tech earnings as well coming out today. And so people are going to be watching for tech, but we've been breaking all-time highs recently. And so, yeah, I would say sentiment is higher. So we have to wait on rate cuts because of the previous president's mess up. Explain, James. Yeah, so I've had a couple people ask me this question. GQ, he said, "What's up, John? I just got in. I have a question. My bad if you was already asked this." Yeah, I've been asked this a couple times, but I'll answer it again. If Powell cuts rates today, which won't happen, yep, I agree. But if it does, you think the market shoots up? Probably. You never know. There's variance, but probably. GDP was quarter one GDP was negative, Tracy. Quarter two GDP was positive. That's what it was. What's up, Faye? Yeah, I mean, we're gonna pause today, probably. Whenever an outcome is this probable, we kind of pivot to what Powell says, and what Powell says is going to, my guess, and again, it's just a straight up guess. I think Powell's gonna balance it. I think he's gonna be I think we're gonna pause, but Powell is gonna be dovish in his sentiment and tone, right? I think that's the way he's gonna pander the current president's pressure, is that he's not gonna cut. He's not going to do a, surprise cut today when everybody thinks we're going to pause. I think instead it's going to look something like pause today as expected, but dovish sentiment and tone. That's the way he's going to try to, say, hey, but again, I mean, look, quarter two GDP 3%. Payrolls higher than expected. Jobless claims have been lower than expected. Although unemployment on Friday is expected to uptick to 4.2%. But jobless claims is more of a recent one. The unemployment rate lags. So that's my guess. But it's just a straight up guess. Let me know what you guys think. Right, exactly what whatever he said. He said Powell won't cut, but he might show more optimism about cutting next time. Right, that's what I think is going to happen. Personally, again, could be wildly wrong. Maybe we cut today and Powell's hawkish. I don't think that's going to happen. I'm also curious to see if he comments on quantitative tightening today, whether we're going to end QT. We reduced it by 80%. What was this, like 3 meetings ago? 4 meetings ago? 3 meetings, 4 meetings ago? But we're still doing it to a certain extent, and we're still doing it fully with MBSs. So. Yeah, Friday we got non-farm payrolls, unemployment data coming live. So that's a big thing. All right, guys, we got 37 minutes before the FOMC decision. 37 minutes. Cuts come with trouble. I want a rate cut. I just don't want the Fed buying MBS anymore. It's insane. Imagine if he shows up with the construction helmet. Yeah, I saw some funny comments about that. They, like, again, the president and Powell were like an old married couple. You could tell they just did not like each other. They're arguing about the new building and the budget around it. Sounds like a husband and wife arguing about an extension project they're doing to their home. It's funny. Yeah, so I see somebody say, I want a rate cut. I just don't want the Fed buying MBS anymore. It's insane. You're talking about quantitative easing? Because we're doing quantitative tightening right now, which is letting our current holdings in treasuries and mortgage-backed securities run off the balance sheet. That's not buying it. That's restricting liquidity from those markets. It's a restrictive monetary policy, a hawkish thing. And ending QT would be a dovish thing because it's ending a restrictive monetary policy. Anyways, we're pulling back down. We're at 520s right now, 520s. Yeah, no, they're funny, man. Powell and Trump are hilarious. And again, I'm very neutral politically. I really am. I'm not against you, either side you're on. But I got my popcorn out whenever they get together. I got my popcorn out today too, but... Yeah, no, exactly, right? Like, I agree with you, Tony. That's why somebody's like, hey, let's pause and do QE. Let's not. That's going to spike inflation over almost everything else. You know, like, let's not do QE. Let's not print more money. That sounds like a terrible idea. Like, it's better to just cut interest rates a little bit. If you really want, like, a dovish thing, cut interest rates. I'm okay with ending QT and balancing it if we pause. But I don't want to print more money. And, you know. Was it Bank of America that said we could get real bad employment data this Friday? Did they really? Honestly, though, I don't really listen to banks, especially in terms of economic data. Like, listen, if it's your first time joining me, I cover every single major economic event here on this channel. I'm mostly a live streamer. So I live stream all these major economic events. Banks can and are wildly wrong a lot of the time about things, you know? And so I have this big saying, watch what the banks do, not what they say. I've seen times in history in which the market's down 20%. And the banks come out and they're saying, hey, it's fire and brimstone. Like, we're going down. You want to sell, 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 sell. And then we have one of the longest bull runs, one of the most powerful bull runs in history following it over the next year or two. And when you look back at who profited from it, it's the same banks that are telling you, sell, sell, sell. And so I watch what the banks do, not necessarily what they say. They can say whatever they want about payrolls. I'm going to understand that context behind it, which is that banks don't necessarily have an incentive to be completely honest about what they're doing or what they think is going to happen. Sometimes they do. You're against printing, but you're against tariffs. I'm not really. I'm kind of neutral on tariffs. I think tariffs would help the country Long-term, short-term, though, negatively impacted, of course. I'm kind of neutral on it. My fear right now is inflation, and I don't want the Fed to do anything that might make inflation much worse. I think rate cuts obviously could make inflation worse, but I think whenever something obviously makes inflation much worse in a much more predictable way, like money printing, quantitative easing, that's a much bigger risk to me than just lowering the federal funds rate. And again, they're correlated, they're similar, but they're not the same, and I think QE risks inflation spiking in a more pronounced way. And so I just don't want to print more money. Powell's 100% not priced in yet. Well, it's not 100%, but it's like 97.5% right now. Let me see. It's 97% likely. You know, here is a pause. That's a pause. Cut. This is 3% if you can't read that. This is 97% basically. So while it's not 100%, nothing in finance ever is, you know. Like, there's not a 100% chance I don't win the lottery 5 days in a row, you know. All right, guys, NASDAQ's really tightening here. Yeah, but when you were so much into stocks, why did you fear inflation? Because I'm self-employed. Like, look, if your employer is just gonna raise your wages within the inflation rate, that's one thing. But if I work for myself, I don't want to see prices go up. Again, $100,000 used to mean something. Now it really doesn't. People are still bragging about 100K. Like, oh, I make 100K. 100K is kind of average right now. And that's good. I'm not against you. Listen, make your money. Do your thing. But I don't want to see prices go up. I've seen the last 5 years, and I've covered it for, you know, for this channel. I've covered all the stuff that happened. We saw a market where we'd have higher GDP. We'd get negative reactions in finance. We'd have low unemployment. We'd get negative reactions in finance for a few years in 2023. And so I don't want to see prices go up much. And the only real way to hedge against inflation, I understand what you're saying. The only real ways that hedge against inflation is to invest. Put your money to work in some way. You can buy bonds, try to let that compound. You can buy gold, you can buy real estate, you could buy rental properties. You can invest in indices, NASDAQ, S&P, Dow. You can try to handpick stocks. You know, most of those are going to perform well. They're at least going to beat inflation to a certain extent. Not always. Nothing's 100%, but you got to invest long term. You know, the S&P, NASDAQ, Dow are incredibly consistent long term over decades. Short term, higher risk. Bonds, safe, but lower yields. You know, the compounding effect of investing into indices like the NASDAQ and the S&P is probably the best way to do it. You could also buy crypto. Crypto's done really, really well over the last 15 years. All of them have their own sets of risk from it. But if you don't invest in something, you're going to lose money over time to inflation. That's just how it goes. And so, but it doesn't mean I welcome inflation just because I hedge against it. You know, I don't think any of us really like inflation, but inflation can also be a sign of economic strength. So. I'll speak it at 2:30 Eastern Standard Time in about an hour. We actually have the rate decision in about 30 minutes. Again, we're going to stream this live, as we always do. Yeah, I mean, it's going to get passed on the consumer's mama pawn. You know, that's what the argument against rate cuts is tariffs are going to cause higher prices that are eventually passed on to consumers. But it looks like we got deals done with most countries. I'm sorry. China we're still waiting on. I think that's the big one. I think leading into Friday, whether we get an extension or a deal with China done, hard line deal, not just like, hey, we got a deal done, but like actual deal done, extension, something with them. I think that's big. But they spoke in Sweden over the weekend. Maybe it was the last few days, and they came out saying that they had constructive talks, but that they don't actually have a deal yet. So I think leading into August 1st, I believe China's deadline might actually be August 12th. The other one is India. India is a very big country. Whether we get a deal done with them is important. We got a European Union deal done, which is good. But there's still some question marks regarding the future of tariff trade deals. Best stream I found for live from respect, sir. Hey, thank you, DJ. Appreciate you, brother. Thank you, sir. Yeah, like I said, I've been covering these things for years. A lot of people streaming these. They're just starting to stream it just because it's the cool thing to do. But I've been watching every single Fed meeting for years and years and years. I love economics. I cover all the economic reports that come out too. So if you want a place that covers all of it, that actually understands it, subscribe, hit the notification bell. I try to be neutral. I'm not really pushing for anything today. I'm curious to see what happens today. I think Powell's going to be dovish, but pause today. But I might be wrong. You never know. There's always, again, nothing is 100% in finance. The more 100% definitive, absolute people act like, especially I day trade sometimes. The more absolute people act like a direction is we're going, they're like, yeah, we're going up. If you think it's 100% we're going up, you have no idea what you're talking about. There's so much variance. I love poker. I could have pocket aces. It doesn't mean I have a 100% chance of winning. Doesn't mean I shouldn't bet with it, but nothing's 100% in finance. Don't expect Canada to make a deal. I'm not saying Canada's not important for trade. They're kind of important, but they're not like China. You know, prior to us getting this last pause in with China, I told people, I said, look, China, we are the single largest buyer of Chinese goods in the world. They want to get a deal done. 100%. You can say, oh, well, they're going to go to somebody else. Maybe, but any business owner, if you say, hey, you're going to lose 30%, he's going to say, nope, let's get a deal done. Let's figure this out. And so the U.S. certainly doesn't want to lose Chinese goods because that's going to really cause inflation problems. And China certainly doesn't want to lose us as a buyer. I think that's the big one that I'm waiting to see what happens there regarding trade with them. But I tend to think both of them want to get a deal done. They might say otherwise. You know, you watch what they do, not what they say. They might say, yeah, we don't need the U.S. or whatever. You got to watch what they do. And their actions show they want to get a deal done. Canada, maybe not so much. I don't know. Something like that, Block. Yeah, we had a post earlier about India. All right, so the director Hassett says data is consistent with the Fed cutting rates. Bloomberg reports. What data? Assuming he means the economic data coming out is consistent with the Fed cutting rates. Pending home sales did decrease when they expected a positive at 10 a.m. this morning. We got that data. So. $50 basis points today. You think we cut rates 50? I mean, I think you're wrong, but maybe. You know, we'll see. Again, I'm going to go back to this, and maybe I'll eat my words, but I don't think there's much of a chance we cut rates today. I think September is when we'll cut if we're going to cut. I've covered every single FOMC decision for years. The CME Watch tool hasn't been wrong once. In years, dozens of decisions, years, it hasn't been wrong once. And so, I mean, especially when it's this polarized, right? There's been a couple times it's been like 60-40, and then we cut 50 basis points in September last year, and all that's good and fine. But when it's this polarized to one side, 97-3, the safest bet is on the 97. you know, for all my poker players out there, you know. Rate cut odds have tripled in 2 days. Yeah, what, from 0.7% to 2.5% or whatever it is, or to 2%, I mean, or from 1% to 3%, I should say. It's at 3% now. It was at 2% this morning. All right, so Senate Democrats on Wednesday will mount a last-ditch effort to block the president's tariffs from taking full effect at the end of the week, according to Axios. Senator Jean Shaheen on Wednesday evening will ask lawmakers to unanimously pass a bill affirming that the tariffs can't be authorized under the International Emergency Economic Powers Act, according to Axios as a source. All right, so we're very sideways now leading into this Fed decision in 23 minutes. We get cut September and December. Yeah, I think that's probably right. Evo, 50 basis point cut could scare the markets a little. Yeah, I mean, a lot of the time when the Fed cuts, they do start off with 50, but not always. And we'll see. They're usually a little bit more balanced too, but I think if we do cut, it would be 25, but I don't think that's happening. But maybe you're right. Again, I don't know. There's variance, but again, I'm going to stick to my CME watch tool update. Bear market until 2029. Yeah, you might. I'm not necessarily against changing your mind there, Costas. I think that's possible. I think house prices are inflated. 2021, they went up ridiculous amounts. And this is coming from somebody that just bought a house, an investment property. But I wouldn't even be mad if it's a long-term investment, so I'm not even mad if prices come down a little bit. I think they should come down to earth some. I'm not even against what you're saying, but cutting rates would make prices spike more, because people would have lower interest rates and they'd refinance and they'd want to buy more, you know? And so we did see pending home sales decrease this morning. So our Nasdaq's moving up. We're at 540s right now. 540. SPY's moving up. We're at 637s. Nvidia's at 179s. Very close to all-time highs. All-time highs on Nvidia, just to put this into perspective, leading in the FOMC decision. All-time high is 179.62 for Nvidia. I'm going to draw it right there, but I might actually move this a little bit. All-time highs are right here. All-time highs are right here for Nvidia. So we are actually pretty close to all-time highs. Nasdaq's heading up. Apple's rebounding. SPY is rebounding back up. So overall, a pretty bullish sentiment leading into this rate decision. Still have 20 minutes left though, chat. 20 minutes. All right, look at the Nasdaq testing this 550 level, just broke highs of the day. The level that I drew on the chart is this 550 level. Look at that rejection. I mean, it's gonna hold down. Now we're popping right back up, getting some buys. SPY just broke highs as well. Apple's been moving up. Meta's bouncing back up a little bit. Google's been pretty green on the day. Look at that top 3 greatest level of all time here. Look at that 550 rejection. All right, so the U.S. president touts EU and Japan trade deals negotiating with other countries. Rest will receive a bill. Okay, so this is what news we just got. again, he touted EU and Japan trade deals. He said negotiating with other countries. Rest we'll see the bill. Oh, seems to be on a bull run. But music playlist, it's just an old playlist that I built. All right, we just broke highs again on the day. And then we came right back down. So that 550 level we drew is holding some resistance. Let's see if it continues down. Again, 18 minutes left, chat. First move isn't always the right move. Yeah, I mean, it's very true. Buy the rumor, sell the news. First move can be the wrong move for sure. Again, I think that sentiment is bullish today. Look at my level work though. Again, I have a system where I just scalp my own levels here. Like, look at that. You get some profit to make. It's not a lot, but this was the previous high of the day too. I just know markets respect psychological milestone levels like 550, and so that's what we just did here. Powell speaks in 47 minutes, 46 and a half minutes. The decision's in about 17 minutes, 16 to 17 minutes. Again, hit that like button, hit that subscribe button. Let's boost the stream. Help me out. Hit the like button, hit the subscribe button. If you appreciate the content that we have here, and I try to break it down in an understandable way for people, you know, the rate decisions are balanced, or the rate decisions are supposed to be balanced, right? So the Federal Reserve has a dual mandate, which is strong labor market and price stability is the dual mandate. Basically, a strong economy and good and low prices. And so that's what their job is. If we have high prices, they will be restrictive and raise rates. If we have economic weakness, they will stimulate the economy through lower interest rate environment. And they can also do more desperate things. Again, QE, money printing, creating online bank reserves, using that to buy up bonds and other MBS assets. Injects liquidity into those markets, helps bring interest rates down a little bit faster, but can cause inflation to spike. And then QT is the opposite of that, kind of. It's not directly selling those assets, but it's letting them mature and run off and expire off their balance sheet. Does the opposite effect, which is kind of keeps interest rates a little bit higher. It's more restrictive of a monetary policy, pushes the economy down a little bit to combat inflation. I appreciate it, Keegan. Thanks, sir. What's up, V? Thank you, man. Yeah, I hear like a lot of people with crypto saying that we should print money right now. Again, what's the point of Bitcoin going up if prices are going to increase with it? You know, it's kind of a cancel out. I'm in Bitcoin, just to clarify. But what tools do they use to measure labor? GDP, payrolls, unemployment to a certain extent, but not in the same way. No, Bitcoin, I like Bitcoin anyway where it's at. I think Bitcoin is going to go up too. Look at my level though. I got to respect the level. Top 3 greatest level of all time here. 15 minutes, guys. 14 minutes, really. We definitely want more printing. All right, guys. 14 minutes. Buy at 636s. Again, we got Meta and Microsoft earnings after the bell today too. And SoFi at 22s right now, 22s. SoFi is up. Meta's sideways down a little bit since the opening bell. SPY is pretty green on the day. Why does everybody keep thinking the market will tank Friday? Well, there's a couple catalysts that happen on Friday. This level, somebody's asking me about this level. Here is the previous high of the day. I look at milestone levels. So I look at what level over the high of the day might cause a liquidity grab. And usually they're psychological. So like 525, 550, 575, 23.6, 23.625, 23.650, 23.675, you know, so forth and so on. And milestone levels. If it's 24,000, it's even bigger milestone level. If it's an all-time high, it's even bigger milestone level. And so I drew this level here prior to this test because I thought we might break this high and then reject at the 550 psychological level, and that's exactly what we did. We came right back down. We got a lot of catalysts that happen on Friday. Non-farm payrolls, unemployment report, Michigan consumer sentiment, and inflation expectation. And aside from all of that, we have the tariff deadline of August 1st, Friday. So we got a lot of different catalysts from a lot of different sources coming out on Friday that might give us a important look at where we're at in the economy. All right, guys. Again, we still got 12 minutes left. 12 minutes before this meeting. Again, the odds of a rate decision today, 97 to 3% odds of a pause. We are almost certainly not going to pause rates. If you take a look at bond yields here, bond yields have been going up a little bit, but sideways for the last few minutes. But they're up a little bit elevated today. Showing but they're down pretty big, actually, if we take a look at this from yesterday. 29th was here. They've decreased and then spiked a little bit, but now we're lower interest rate sentiment overall, but higher on the day. NASDAQ, big range, but sideways. Big sideways range. Amazing. Got it, man. Understood. No worries. Fed holds. Meta, Microsoft both beat. Both up minimum 5%. Maybe. Let me know in chat what you guys think we're going to get today. What you think Powell's tone will be, as well as what you think the decision is going to be. It's going to be a pause, but let me know. All right, guys. A little bit over 10 minutes left. Hey, thank you, Eric. Appreciate it, brother. Thank you, sir. You think we're going to get a rate cut? I don't think so, man. Maybe. I'll eat my words. Listen, I'll make fun of myself so much if we get a rate cut today. But I'm going to watch the chaos ensue either on the upside or downside if we do get a cut. Again, what I'm more curious about is the state of quantitative tightening. I want to see if we get QT today. What color will Powell's tie be? I'm going to go with purple, either light or dark purple. All right, guys, get ready. Less than 10 minutes before the rate decision. Again, we're going to cover it live as soon as it happens. Be ready. Rate decision live, 2 p.m. Eastern Standard Time. We got less than 10 minutes left. Mauve? I think a green tie would be kind of risky for Powell. I think a red tie would be even more risky. Yeah. I'm risk off sitting on cash until after Powell. Made good money today. Maybe. No. No chance to cut today. September cut is now 50-50. Is it really 50-50 already? Let's take a look at September here. It's I would call it 60-40. It's actually almost exactly 60-40. A cut is these two combined. A pause is this one. So it's almost exactly 60-40 in terms of a cut in September. A cut by September, including today and yesterday. And in September, I mean. All right, guys, 9 minutes left. 9 minutes. Is a cut happening? Not today, probably. It's 97 to 3% odds of a pause. No cut today. 97% likely we do not cut interest rates today. wouldn't say it's 100% tie, but it's close. Yeah, as we get closer to the meeting, they usually decrease and decrease and decrease. Although I have seen the July number's actually up a little bit from this morning. So today's number, the odds of a rate cut increased slightly, but they're still not high. 3% odds versus 2% this morning, whatever it was. All right, guys, 8 minutes. Yeah, make sure you hit the like button next to the play button. 97% likely that we pause interest rates today. 97% probability of pause today. If rate cuts happen, will a gold climb? Not necessarily. The rate cut would put the markets to new all-time high. Yeah, maybe. I mean, we're not that far away from all-time highs, and so I think if we do a 25 basis point cut, maybe that's true. If we do a 50, I think that signals panic. But you're probably right. But you never know. We could go the other way too. Could signal panic for some reason. All right, guys, we got 7 minutes left. 7 minutes. We got about 2,000 people here. I appreciate the love. Again, hit the subscribe button, hit the notification bell. Thanks so much, chat. I appreciate the love. We're getting pretty close to 165,000 subscribers, so if you haven't already, do it now. Very choppy, big range, but choppy nonetheless. We got big tech earnings after the bell today, too. I think they both beat and are up massive. Maybe. We'll see. I typically want markets to go up, so I would be okay with that. All right, guys, 6.5 minutes, a little bit less than 6.5 minutes. Nasdaq's surging up right now. Okay, so the president said Fed Chair Powell probably won't lower rates today. Keeping interest rates high is hurting people, and we should lower rates. He said, I hear they're going to do it in September when speaking on the Fed cutting interest rates. And so again, the president literally just said they're probably not cutting rates today. Chat. So. Again, the president basically said he hears they're going to do it in September. He said we should cut it today, but he hears they're going to do it in September, which basically confirms, again, we're going to pause rates today, chat. The big important thing is going to be what Jerome Powell says during the actual press conference. What Powell says during the press conference is going to matter much more than the pause decision that we get today. Probably. Imagine if they cut today. Yeah, if they cut today, it'd be chaotic. But again, it's just almost certainly not happening. Again, people have confirmation bias. They want us to cut, so they think we are. I don't think we are. I think September is when we're going to cut. And again, that's always subject to change. We get strong economic data mixed with high inflation, then we're probably going to push back those rate cut odds at least a little bit. Gold can go up with rate cuts, but it reduces the opportunity cost of buying gold, kind of. With that said, I'll probably put gold up. I'm gonna put gold and maybe like the dollar index here. All right, chat, we got 4 minutes left. 4 minutes. All right, chat. Here we go. Let's see what we get. Nasdaq's moving up. Yeah, the meeting starts in 30 minutes. The actual decision starts in about 3.5 minutes, though. And so we're going to cover the decision followed by the meeting at 2 p.m. The decision starts at 2 p.m. Eastern Standard Time in about 3 minutes. If we cut today, I want to witness how the market behaves. Yeah, I mean, if we cut today, I'm curious too, in all honesty. If we cut today, I'm genuinely curious about what we're going to see. NASDAQ started to come back up, but again, we're sideways here. Remember, all-time highs on the NQ are 650, basically. We're at 550. You know, the SPY is right here. All-time highs on the SPY are 640s. We're at 636, about $4 away. Gold at 33.50s. Dollar index at 99.41s. All right, 3 minutes left. A little bit less than 3 minutes, actually. Make sure you hit the live button next to the play button. Make sure you're fully caught up on the stream, chat. Again, make sure you hit the live button next to the play button. Make sure you're fully caught up on stream. NASDAQ is mostly bullish over the last 2 hours. Holding at the top of the range towards the highs of the day. Ahead of this rate decision in about 2.5 minutes. Yeah, if you put it at 1.5x or 2x speed, it should always catch you up to the stream. About 2 minutes left, chat. 2 minutes. Here we go. Let's see what the rate decision entails. Less than 2. Again, hit the live button next to the play button. Get your last minute predictions out. We have 70% likelihood of a pause after over 2,000 votes. 30% say we're likely for a cut. I disagree. I think especially after the president says he doesn't think we're going to cut rates today, it's probably going to be in September. The odds of a cut should be going way down for today specifically. Way down for today specifically. Again, they're always subject to change, but I think even the president doesn't think we're cutting rates today. All right, guys, here we go. We got a little bit over a minute left. A little bit over a minute left. Hit the live button next to the play button. Make sure you're fully caught up on stream. All right, guys, 45 seconds. 45 seconds. We got about 3,000 here. Again, hit the subscribe button, hit the notification bell. We got 40 seconds. Again, we're going to break it all down. We're going to break the statement down. We're going to break the decision down. We're going to watch the SPY, the NASDAQ, gold, the dollar index on the right. This is a little bit early, so the actual decision comes in about 30 seconds. A little bit less than about 20 seconds, actually. All right, guys, 20 seconds. All right, here we go. 15 seconds. A little bit less than that, actually. All right, we got about 5 seconds left, a little bit over that. All right, let's watch the market. I'm gonna zoom in here. Here we go. Here's the decision right now. Okay, we paused rates. All right, so I'm gonna read this here for you guys. Although swings in net exports continue to affect the data, recent indicators suggest that growth of economic activity moderated in the first half of the year. The committee is attentive to both sides in support of its goal and decided to maintain the target range at 4.25% to 4.5%. The committee seeks to achieve maximum employment and inflation at the rate of 2% over the longer run. Uncertainty about the economic outlook remains elevated. The committee is attentive to risks to both sides of its dual mandate. It says the unemployment rate remains low and labor market conditions remain solid. Inflation remains somewhat elevated. Recent indicators suggested the growth of economic activity moderated in the first half of the year. And so again, in support of these goals, they decided to maintain the rate at 4.25% to 4.5% for the federal funds rate. So we paused rates, as I told you guys we would. Not really a super big shock to this. Again, we did pause rates today. Not a shock. And again, I'm going to read this again. Although swings in net export controls continue to affect the data, recent indicators suggest that growth of economic activity moderated in the first half of this year. The unemployment rate remains low. Labor market conditions remain solid. So, again, in assessing the appropriate stance of monetary policy, continue to monitor the implications of incoming information for the economic outlook. The committee will continue reducing its holdings of Treasury securities and agency debt and agency MBS as they're strongly committed to supporting the maximum employment and inflation returning to 2% objective. So they're continuing quantitative tightening in MBSs as well as Treasuries. They didn't reduce MBS or Treasury QT. They're continuing QT full at the same rate they have been for the last few months. So they're continuing quantitative tightening. And again, essentially they're continuing QT. But yeah, they basically say both sides of the dual mandate is what they're working on. So yeah, QT remains. Again, they said the committee will continue to reduce its holdings of Treasury securities and agency debt and agency MBSs. They're strongly committed to supporting maximum employment and returning inflation to its 2% objective, is what they said. So this is where we're at now. Again, see what happens, but that is basically where we're at now. All right. So again, the NASDAQ and the S&P have both reacted negatively to this report. We'll put it up on screen, but negatively to this report. Again, we did pause rates as expected today. Told you guys, I mean, again, like, I don't understand how people get caught up thinking that we're going to do something that's wildly unexpected, like cut rates today. I genuinely don't understand how people get caught up actually believing that. We got the full press conference at 2:30. Streamed live here. Again, Waller and Bowman dissented, preferring to lower the federal funds rate by 25 basis points. So that's what happened. And so yeah, let me know what you guys think. I'm checking the chat now. Yeah. Because people don't understand what they're talking about. Every single time, bro. Every single time it's like 98 to 1, 97 to or 98 to 2, 97 to 3% odds of a decision. And yet a bunch of people in chat that are like, hey, nah, we're gonna go with the 2% likelihood. Why? I told you guys we'd pause today. Honestly, I don't want to look stupid. And so if I thought there was even a slight chance we'd cut rates, I wouldn't have been so polarized in the pause direction today. But of course, like this is what we're gonna happen. Again, we got the actual press conference going live. 2:30 Eastern Standard Time. We got 25 minutes for that live. Stick around. We are going to be streaming that live here as we always do. Don't go anywhere. We're going to stream the full thing live. So. All right, we got the FOMC. NASDAQ started to creep higher though, so we originally reacted, I would say, negatively. We're somewhere in the middle right now. We haven't really done much. And again, we got the White House says the president signed an executive order implementing an additional 40% tariff on Brazil, bringing the total tariff amount to 50%. They say the president's proclamation imposes a universal 50% tariff on imports of semi-finished copper products and copper-intensive derivative products effective August 1st. This is why people think the market's going to react negatively. right, so we're starting to creep higher here. And we got the full FOMC press conference going live, 2:30 Eastern Standard Time in about 23 minutes. Remember it, guys. Powell speaks 2:30. We paused today as we said we would, and so the most important thing pivots to what Powell's tone is like. I think we're gonna have a dovish speech today. I think we're gonna have a dovish speech, but a pause. And again, just to read the statement one more time here, put this into perspective. Just to read the statement one more time. Where'd it go? I lost it. Hold on. Here it is. Although swings in net exports continue to affect the data, recent indicators suggest the growth of economic activity moderated in the first half of the year. Quarter one was negative 0.5%, just to add a side note. Quarter two recently came out this morning at 3%. And so the first half of the year, the average would be 2.5%. But the unemployment rate remains low and labor market conditions remain solid. Inflation remains somewhat elevated. The committee seeks to achieve maximum employment and inflation at the rate of 2% over the longer run. Uncertainty about economic outlook remains elevated, and the committee is attentive to the risks to both sides of its dual mandate, being strong labor market and price stability, low inflation data, basically. In support of these goals, the committee decided to maintain the target range for the Fed rate at 4.25% to 4.5%. They paused rates. Again, they did say again that they're going to continue reducing its holding of Treasury security agency debt and agency MBSs. The committee is strongly committed to supporting maximum employment and returning inflation to its 2% objective. And so just to put this into perspective here, they're continuing quantitative tightening, which is a restrictive thing, So they're not stopping QT. They're continuing QT, which is restrictive, and they're pausing rates as expected. Yeah, I got you. I'll put the timer up. We have about 20 minutes left. We got about 20 minutes. All right, guys. Dollar index is falling. NASDAQ's pushing up. Gold is spiking up a little bit with the NASDAQ. SPY is back up some. NASDAQ's testing highs of the day, but it's still at the top of the range. And remember, we do have Meta and Microsoft earnings this evening. So again, stick around. We are going to stream the entire thing live as it happens. We got 20 minutes left. 20 minutes. Total power. All right, chat. NASDAQ's testing not all-time highs of the day, which is currently sitting at around 560 right now, 560 as we speak. So the White House says the president suspending de minimis exemption for commercial shipments and de minimis exemption suspension effective August 29th. Well, I would argue that anybody that thought we were cutting rates today, again, listen, I'm going to say this again. I say this every single time. If whoever you follow that's streaming live right now that you might watch instead of me told you that we were going to cut rates today, they do not know what they are talking about. Okay? They do not know what they're talking about. They're telling you what you want to hear to hope you tune into them. Anybody that understands this stuff understood we are not cutting rates today. Even the president said we're not cutting rates today. He said September, which is 60% likelihood right now of some type of rate cut by September. And so again, you have to go with the data here. This is something where the data is incredibly accurate, especially in terms of the rate decision we make 5, 10, 15 minutes prior to the decision coming out. And so if you thought we were going to cut rates today, it comes from a lack of understanding about what everything is. Jerome Powell doesn't want to shock markets and cut rates when it's 97% likelihood of a pause, even if the likelihood might mean the market goes up. That's just not how he does it. When he cuts rates, there'll be at least like a 40%, 50% chance of it, usually. Not always, though. If we take a look at 10-year Treasury yields, bonds, from this rate decision, let's see how bonds interpret it. Rates are actually down a little bit. Not rates. Yields are actually down a little bit, showing a lower interest rate sentiment. And so maybe the president's speech influenced these bond prices. If we take a look at the CME Group's watch page, and we take a look at September's now 62% likelihood for a rate cut in September. 62% likelihood. Yeah, 98% likelihood no cut. Again, there's a reason I'm able to say, hey, we're going to do this today. People argue with me, but then we end up doing what I said. It's very obvious what we're going to do. Don't fall for the trap of like thinking that, again, just don't fall for the trap of thinking that like the 2% likelihood thing is going to happen. Again, if you're watching a stream and they're telling you the 2% was going to happen today, they're just pandering to you. You shouldn't like to be manipulated, right? I'm going to tell you guys the truth about what's probably going to happen. And so, again, subscribe if you haven't yet. I appreciate you guys. White House says copper input material and copper scrap are not subject to 232 or reciprocal tariffs. Yeah, but that's pretty regular. R said the president was mad this morning about a cut, calling too late. He's been doing that for weeks now, months, I would say. Yeah, I'm not getting into really politics, but John is the top 3 economists. Definitely top 3-ish. %, in September. Yeah, it's always subject to change. An argument against September would be if we get data that comes out between now and September that shows elevated inflation and prices and strong economics and markets, it's going to decrease the odds of a cut, not increase. So if we get high inflation and strong economy, the odds of a cut are going to go down for September. But at this point in time, they're elevated from when this decision came out. We're now at 62.1%, 62.1%. So we're up there, but yeah. So it's still pretty probable, but it's always data dependent, subject to change. So the real question now, I'm going to end this poll. We got about 3,000 votes. We got about 3,000 votes. Most people bet on a pause. 27% that said a cut. I told you guys we wouldn't do it, but it's okay. What tone will Jerome Powell have today? Again, what would Jerome Powell's tone be? Dovish, data dependent. All right, dovish, data dependent, or hawkish. Go to the poll. Let me know what you guys think. We got 15 minutes left until that happens. Not hawkish. Why dovish? I think Powell's been getting pressure. And so I think the way Powell responds to that pressure, I said this a million times this morning already. I think the way Powell responds to that pressure is, I didn't think he was going to cut today. I thought it would be no cut, like a pause today, but he was going to respond to the pressure through a dovish tone when he speaks, right? Like more optimism around September, October, December Fed decisions in terms of rate cuts. Maybe slightly increased odds based off of what Powell says. I think that's the way he's going to bend to the pressure a little bit, is going to be through his tone, not necessarily through today's rate decision. And this is something I said at 8 a.m. this morning. Again, I think he's going to have a dovish tone, but he's going to pause rates. I don't think he's going to do a surprise cut today, which he didn't. And yeah. Data dependent with a hint of dovishness. I can agree with that too. Are y'all still arguing about politics? I swear, I see people arguing about politics. I literally just look for other comments. I don't even respond. So there's too much. Like, I'm not... It doesn't have to do with politics. Done. exactly what's going to happen most likely, than a rate cut in December. Probably going to keep going up until tariff day on August 2nd. I thought tariff day was August 1st. I guess August 1st is the deadline. August 2nd is tariffs kick in. Yeah, maybe. Where's Bitcoin at through all this stuff? Again, check out Top Step if you haven't already. If you want to learn to day trade, do not risk funding your own account tens of thousands of dollars. Most day traders lose money. It makes no sense to. Instead, try Top Step. They give you a 50K demo. You can learn to trade for 50 bucks. If you're good enough, you can pass it, take withdrawals, some of the most reliable payouts in the game, 90% split once you're funded. You get to keep your first 10K in profit, and they paid out millions, fund thousands. Get you around the PDT rule. You can day trade the S&P, NASDAQ, Dow, Russell, you know, gold, commodities. Very similar to day trading stocks, no PDT rule. Just a beautiful way to learn for 50 bucks a month, 100 bucks for the middle one. I'll put the link up. They are a sponsor of mine. I am top 3 most biased ever because I get paid by them. But if you want to help support the channel, I'll put the link up. Great way to help support your boy here in this channel. I appreciate you guys. Understand all this stuff on the screen. I can't guarantee anything. Top 3 worst trader ever. I'm not going to talk about what if Jerome Powell cut today because he didn't cut. I've already talked enough about what would happen if he cut. He didn't cut. Case closed. Yeah. Discussion with China will keep going for a while. Yeah, I mean, we haven't had anything finalized, but I think they'll probably push back I think they'll probably push back the deadline for them. They're the most important country for sure. I mean, Europe's pretty important. China's the most important one. That's the one where you want a deal done. What time does Powell speak? 2:30 Eastern Standard Time. Yeah, there's a timer on the right. It's in big yellow letters. It's also in the title of the stream. It's also in the description of the stream. Yeah. Yeah, Bitcoin down a little bit. Hadn't really reacted favorably to it. Although Bitcoin was kind of down on the day already. It didn't really move from the Fed decision. All right, guys, we got 10 minutes left. 10 minutes. Yeah, thank you, Jacob. I swear, bro, people ask me so many times, they're like, hey, what time does it happen? And the stream will be like, Jerome Powell speaks, 2:30. And they're like, hey, what time is it? What time does it happen? There'll be a timer in the bottom right. It'll be a big yellow letters at the bottom. It's all love. I appreciate you guys watching my stream. You can ask me as many times as you want and I'll answer it. But I might troll you a little bit as I do. And I think that's pretty understandable. We got 2 months left in the Bitcoin 4-year cycle. That's it. Watch the bond market. Yeah, bonds are decreasing from this, showing a lower interest rate sentiment. I mean, this decision was already baked in. And so bond prices are still elevated. I mean, we're still restrictive. Rates are high. Bond market really hadn't moved. It's gone up and down, but it really hadn't moved since March. Gone down, up, down, up, down, up, down. It's basically flat since March. So if we're talking about specifically today, bond prices have actually decreased some from this decision. So yeah. Bitcoin also high 168 in December, maybe. Yeah, 2:30 Eastern Standard Time. We got about 9.5 minutes left. Yeah, but I like watching you from Europe. Then if you like watching me from Europe, then look at the timer. Right there, brother. Right there. Look below. Down there. Look, I can even make myself teleport down there. You know? Right here. Look at this timer down here. It'll tell you when the press conference is starting. My friend. Alright. There you go. You gotta love tech. Alright guys, so we're starting to break down. We're at 535s. Gold's climbing higher. It's at 3350s, but still somewhat of a negative reaction, although a lot of stuff's choppy and flat. People kept acting like we were gonna run. I think a lot of people are gonna be sitting waiting for Powell's tone here. What does Jerome Powell say? We did a poll. Our poll says 42% dovish, 40% data dependent, 18% hawkish. So nobody thinks he's going to be hawkish. Everybody thinks he's going to be either dovish or data dependent. And I kind of agree with you guys. I don't think he's going to be hawkish either. I don't think he's going to push the president. I think if Powell comes out hawkish, there's going to be deep beef between president and Powell. They're already like an old married couple. I just don't think Powell's going to poke at the president in the same way. Thank you, Fernando, for the donation. Data dependent. For J Powell isn't calling them names. Watch for any cough, sneezes. Tie color. Tie color is always purple. Kind of like a mix between green and red. I know it's not the actual mix, but it's close enough. I think purple is how he keeps his tie color neutral. You know, the market's a bunch of degenerates. They're going to look for green tie up, red tie down. If Powell ever wore like a straight red tie, I think the market would freak out. Hey, thank you, DJ. Appreciate you, brother. Thank you, sir. Yeah, market would spaz out. I agree. Mauve? Yeah, I agree. Usually it's a purple tie. Sometimes it's like a lavender color. Other time it's a darker purple. So most of the time it's mauve. Sometimes it's more of like a violet. You know? But usually it's purple of some sort. Powell dresses like Andy from The Office. Anyways, we're testing this 550 level. We got gold down there at 3350s. Gold is still down. Bitcoin down. Dollar index down. NASDAQ up. SPY up. Crypto mostly down. SPY is slightly up, but flat nonetheless. Green on the day, though. My music's better. Al didn't wear a tie. Hey, bud, I was wondering if you think more focus today is about tariff uncertainty. I think he's going to focus on that, sure, because that confirms why they didn't cut rates today is the tariff uncertainty. At least that's going to be his argument. And so I certainly think he's going to focus on that, which would probably mean he's going to be data dependent and say, I don't know. So that's kind of where I'm at now with it. Like, yeah. Or we've down 40% in the last 5 weeks. Yeah, guys, we got 4 minutes left. Yeah, remember, we got Powell speaking today. put this up. I'm gonna mute the music so I can get everything ready. All right, just give me a second. We're going to make sure this is clean and easy to see. Bear with me. Here. Stuff out the way. Zoom in a little bit here. We're ready. We're sitting on hold waiting for them to start. We'll watch the NASDAQ. We'll probably watch like the SPY too. Put gold up too, but I'll probably just put the SPY up here. Regular NASDAQ up here. There we go. How's that? That's pretty good, right? Let me find my other chart here. And I'm gonna turn the music up. Or turn the music down, I mean. So I can play this. No mute. And I'm turning the volume up a lot so you can make sure you can hear it when it comes on. Okay. Waiting for Powell to come on. Volume's up all the way.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Despite elevated uncertainty, the economy is in a solid position. The unemployment rate remains low, and the labor market is at or near maximum employment. Inflation has been running somewhat above our 2% longer-run objective. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged. We believe that the current stance of monetary policy leaves us well positioned to respond in a timely way to potential economic developments. I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that growth of economic activity has moderated. GDP rose at a 1.2% pace in the first half of this year, down from 2.5% last year. Although the increase in the second quarter was stronger at 3%, focusing on the first half of the year helps smooth through the volatility in the quarterly figures related to the unusual swings in net exports. The moderation in growth largely reflects a slowdown in consumer spending. In contrast, business investment in equipment and intangibles picked up from last year's pace. Activity in the housing sector remains weak. In the labor market, conditions have remained solid. Payroll job gains averaged 150,000 per month over the past 3 months. The unemployment rate at 4.1% remains low and has stayed in a narrow range over the past year. Wage growth has continued to moderate while still outpacing inflation. Overall, a wide set of indicators suggests that conditions in the labor market are broadly in balance and consistent with maximum employment. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.5% over the 12 months ending in June, and that, excluding the volatile food and energy categories, core PCE prices rose 2.7%. These readings are little changed from the beginning of the year, although the underlying composition of price changes has shifted. Services inflation has continued to ease, while increased tariffs are pushing up prices in some categories of goods. Near-term measures of inflation expectations have moved up on balance over the course of this year on news about tariffs, as reflected in both market-based and survey-based measures. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5%, and to continue reducing the size of our balance sheet. We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks. Changes to government policies continue to evolve, and their effects on the economy remain uncertain. Higher tariffs have begun to show through more clearly to prices of some goods, but their overall effects on economic activity and inflation remain to be seen. A reasonable base case is that the effects on inflation could be short-lived, reflecting a one-time shift in the price level. But it is also possible that the inflationary effects could instead be more persistent, and that is a risk to be assessed and managed. Our obligation is to keep longer-term inflation expectations well anchored and to prevent a one-time increase in the price level from becoming an ongoing inflation problem. For the time being, we're well positioned to learn more about the likely course of the economy and the evolving balance of risks before adjusting our policy stance. We see our current policy stance as appropriate to guard against inflation risks. We're also attentive to risks on the employment side of our mandate. In coming months, we will receive a good amount of data that will help inform our assessment of the balance of risks and the appropriate setting of the federal funds rate. At this meeting, the committee continued its discussions as part of our 5-year review of our monetary policy framework. We focused on potential revisions to our statement on longer-run goals and monetary policy strategy, and are on track to wrap up any modifications by late summer. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Thanks, Chair Powell. There's a lot of lean in the markets, and not to mention out of the administration for a rate cut now in September. Is that expectation unrealistic at this point?
So As you know, today we decided to leave our policy rate where it's been, where I would characterize as modestly restrictive. Inflation is running a bit above 2%, as I mentioned, even excluding tariff effects. The labor market's solid, historically low unemployment. Financial conditions are accommodative, and the economy is not performing as though restrictive policy were holding it back inappropriately. So it seems to me and to almost the whole committee that the economy is not performing as though restrictive policy is holding it back inappropriately, and modestly restrictive policy seems appropriate. All that said, there's also downside risk to the labor market. In coming months, we'll receive a good amount of data that will help inform our assessment of the balance of risks and the appropriate setting of the federal funds rate.
So just to follow up, by coming months, does that include the possibility you'll be getting essentially 2 rounds of jobs and inflation data between now and the September meeting? Is that potentially adequate to make a decision to lower rates at that point?
So you're right. We do have, this is an intermeeting period when we'll get 2 full rounds of employment and inflation data before the time of the September meeting. We have made no decisions about September. We don't do that in advance. We'll be taking that information into consideration and all the other information we get as we make our decision at the September meeting.
Steve.
Thank you, Mr. Chairman. You took out the word or the notion that uncertainty has diminished from this statement. Does that mean uncertainty has increased? And I'm just wondering, the administration has struck several deals with large trading partners where it seems like we now know what the rate is going to be. Does knowing that rate add to your certainty to change policy, or do you need to wait to see the economic effects?
So essentially, the statement in our statement about uncertainty reflects what's gone on since the last meeting. So at the time of the last meeting, uncertainty had moved down a little bit, but it was more or less even this time. So we took out, had diminished because it didn't diminish further. So there's not really much in that. And then your second question is, say again?
There have been several deals that have been struck, and now we seem to have an idea what the tariff rates are going to be with some of our large trading partners. Does that not add to the kind of certainty you might need, or is it you're waiting for the economic effects to show themselves?
No, I think we're still, you're right, it's been a very dynamic time for these trade negotiations, and lots and lots of events in the intermeeting period, but we're still a ways away from seeing where things settle down. We are clearly getting more and more information, and I think at this point, people's estimates, our estimates, outside estimates of the likely, effective level of tariffs is not moving around that much at this point. But at the same time, there are many uncertainties left to resolve. So yes, we are learning more and more. It doesn't feel like we're very close to the end of that process, and that's not for us to judge. But it feels like there's much more to come, as well, looking ahead.
Neil.
Hi, Mr. Chairman. Neil Irwin with Axios. This morning we got a GDP report in which final domestic private purchases decelerated, slowest pace since 22. There was a weakness in the interest-sensitive sectors and residential investment, commercial structures. Are those not signs that monetary policy is a little too restrictive right now, given current economic conditions?
So the GDP and PDFP numbers came in pretty much right where we expected them to come in. You got to look at the whole picture. So certainly, as I mentioned in my opening remarks, economic activity data, GDP, private domestic final purchases, which we think is a narrower but better signal for future, for where the economy is going, has come down to a little better than 1%, 1.2%, I think, in the case of GDP for the first half, whereas it was 2.5% last year. So that has certainly come down. But if you look at the labor market, what you see is, by many statistics, the labor market is kind of still in balance. It's things like quits, job openings, and let alone the unemployment rate. They're all by many measures, very similar to where they were a year ago. So you do not see weakening in the labor market. You do see a slowing in job creation, but also a slowing in the supply of workers. So you've got a labor market that's in balance, albeit partially because both demand and supply for workers is coming down at the same pace, and that's why the unemployment rate has remained roughly stable, which is why I said we do see downside risk in the labor market. I mean, our two mandate variables, right, are inflation and maximum employment, stable prices and maximum employment, not so much growth. So the labor market looks solid. Inflation is above target, and even if you look through the tariff effects, we think it's still a bit above target, and that's why our stance is where it is. But as I mentioned, downside risks to the labor market are certainly apparent.
So on labor, given the fluid labor supply situation, is there a number for this jobs report we get on Friday that would look to you like equilibrium job growth?
The main number you have to look at now is the unemployment rate, because if it's true that the demand for workers in the form of, let's call it, just say payroll jobs, that number has come down, but so has the break-even number, kind of in tandem. So, as long as that puts the labor market in balance, the fact that it's getting into balance due to declines in both supply and demand, though, I think it is suggestive of downside risk. So we of course, will be watching that carefully.
Thank you. Colby Smith with the New York Times. Two of your colleagues called for a quarter-point cut today, and I'm wondering what aspects of their argument were most compelling to you and how you're weighing their views against those on the committee who, as of the June forecast, were in the camp of the Fed holding interest rates steady for the remainder of the year. And just in terms of the June SEP in particular, is that still the best representation of where the core of the committee is?
So on the dissents, what you want from everybody and also from a dissenter is a clear explanation of what your thinking is and what are the arguments you're making, and we had that today. So I think basically this was quite a good meeting all around the table where people were thought carefully about this and put their positions out there. As I mentioned, the sort of the majority of the committee was of the view that inflation's a bit above target, maximum employment is at target. That calls for modestly restrictive, in my way of thinking, modestly restrictive stance of policy for now. But we had two dissenters who I think, you want that clear thinking and expression of your thinking, and we certainly had that today, I think all around the table. In terms of, you asked about the June SEP, I wouldn't, that you're right, that's what it says, and that may well, I couldn't point to it 6 weeks later as expressing people's thought. You really can't do that. We don't run an SEP, and I don't like to substitute in my own estimate of what the SEP might be. We don't have one. So I'll just say that, we haven't made any decisions about September. We'll be monitoring all the incoming data and asking ourselves whether the federal funds rate is in the right place.
And just on the point about policy being only modestly restrictive, does that mean that there's actually not much scope to reduce rates once the conditions for a cut are met, barring a significant weakening of the labor market? So
let me say, my own estimate is modestly restrictive, and there are a range of views of what the neutral rate is at this moment for our economy, and so others may say it's more restrictive or less restrictive even. We're going to be at some point, when we return to moving toward a more neutral stance, we'll be making that judgment as we go. I don't think we have a preset course. It's not so mechanical as saying, we've derived with great confidence the neutral rate and that is our destination, because really we understand that no one actually knows what the neutral rate is. We know it by its works, and that will be how the way the economy reacts over time to, slightly looser policy.
Nick Timmeros, The Wall Street Journal. Chair Powell, my question is about what have you learned over the last few months about the inflation generating and price pass-through process? And just to drill down, the June CPI report showed evidence of tariff-induced goods inflation. Now, the tariff landscape is only starting to be settled with some of these more recent deals. Given the lags between when tariffs are announced and when they show up in goods prices, is 2 months a long enough horizon to evaluate the impact and be confident that tariffs aren't impacting the broader inflation process?
I think you have to think of this as still quite early days. And so I think what we're seeing now is substantial amounts of tariff revenue being collected on the order of $30 billion a month, which is substantially higher than before. And the evidence seems to be mostly not paid only to a small extent through exporters lowering their price, and companies or retailers, sort of people who are upstream, institutions that are upstream from the consumer, are paying most of this for now. It's starting to show up in consumer prices, as you know, in the June report. We expect to see more of that. And we know from surveys that companies feel that they have every intention of putting this through to the consumer, but the truth is they may not be able to in many cases. So I think we're just going to have to watch and learn empirically how much of this and over what period of time. I think we've learned that the process will probably be slower than expected at the beginning, but we never expected it to be fast. We think we have a long way to go to really understand exactly how it will be. So that's how we're thinking of it right now.
So if I could follow up, is the reticence to look through core goods inflation being driven by the judgment that during the pandemic expectations proved more adaptive than anyone at the Fed expected? Is it being driven by uncertainty over how restrictive policy is?
You could argue we are a bit looking through goods inflation by not raising rates. We haven't reacted to new inflation, but I mean, I wouldn't insist upon that. But I think the base case, as I said, a reasonable base case is that these are one-time price effects. Of course, in the end, there will not be. This will not turn out to be inflation, because we'll make sure that it's not. We will, through our tools, make sure that this does not move from being a one-time price increase to serious inflation. We want to do that efficiently, and that means we want to do it. If you move too soon, you wind up maybe not getting inflation all the way fixed, and you have to come back. That's inefficient. If you move too late, you might do unnecessary damage to the labor market. So there won't be, in the end, a big inflationary problem. What we're trying to do is accomplish that in a way that is efficient. But in the end, there should be no doubt that we will do what we need to do to keep inflation under control. Ideally, we do it efficiently.
Michael McKee from Bloomberg Television and Radio. The one big bill, leaving aside the adjectives, do you expect it to add stimulus to the economy in 2026? And would that be an argument for remaining on hold or cutting back on the number of rate cuts you would expect for next year?
So, of course, let me just ritual disclaimer that we don't express any judgments or anything like that on fiscal legislation or other legislation for that matter. But I would say, when you think that, the biggest part of the bill was making permanent existing law on taxes, I don't think we see it as particularly stimulative. There should be some stimulative effect, but it shouldn't be significant over the next couple of years.
And to follow up, I don't want to put this in terms of you and the president, so let me ask it this way. Do you have concerns about the cost to the government of keeping rates elevated for longer in terms of interest rate charges?
Yeah, no, that's, we have a mandate, and that's maximum employment and price stability. And it is, it's not something we do to consider the cost to the government of our rate changes. We have to be able to look at the goal variables Congress has given us, use the tools they've given us to achieve those goals, and that's what we do. We don't consider the fiscal needs of the federal government. No advanced economy central bank does that, and it wouldn't be good if we did do that, it would be good neither for our credibility nor for the credibility of U.S. fiscal policy. So it's just not something we take into consideration.
Victoria. Hi, Victoria Guida with Politico. When it comes to the renovations of the Federal Reserve's headquarters that the administration has been looking into, do you see their interest in that issue as being directly tied to the president's push to get you to lower interest rates?
Not for me to say. I will say we had a nice visit with the president. It was an honor to host him. It's not something that happens very often at the Federal Reserve to have the president come over, let alone to visit a building. But it was a good visit.
Are there any aspects of the project that they've raised that you see as making you reconsider any aspects of the project?
So, this project was hatched and conceived almost a decade ago now, and we went through the very long process of clearing it through historic preservation at the National Capital Planning Commission, and a lot of back and forth there. It was very constructive. We started out to do the work, and we're very well along on that work, and I was quite pleased to have the president say multiple times that what he really wanted to see was us getting this construction completed as soon as possible. That is our focus, and that's what we're going to do.
Thanks, Mr. Chairman. Andrew Ackerman with the Washington Post. What message do you take from the fact that inflation hit 2.1% last September and has bounced higher since? Why do you think financial conditions are restrictive and a neutral rate's below 4% when inflation has stopped falling for almost a year?
So inflation, when you talk about these 12-month inflation measures, you're always battling residual seasonality. So we'll have, for example, 2 months of high inflation sometimes early in the year, and then inflation turns lower, and a lot of that may just be an artifact. So that's why we look at the 12-month numbers. I think inflation is most of the way back to 2%. There are things like the catch-up inflation. So, for example, all the insurance costs that they're only now going through inflation, but they actually reflect inflationary pressures from 2-3 years ago. So that's got to go through. In addition, now we have 3 or 4 tenths of inflation in core inflation from tariffs. So, and we can't really separate that out. We're not going to have a separate kind of inflation that isn't the tariffs. We're always going to be dealing with all of inflation. But the composition, as I mentioned, has really changed. And if you go back to the last couple of years, it was all about services inflation, which was being very sticky. Now services inflation is coming down nicely. Goods inflation was well behaved before, and now goods inflation is going up. So the story has really changed. That's partially because of tariffs. It's also partially because we had restrictive policy in place, and we've seen that the result of that gradually work its way through the services economy.
Okay, the other thing I wanted to ask is, are you comfortable that BLS can continue performing their mission effectively if they take an 8% reduction in headcount and authorized spending as the administration has proposed?
I'm not going to comment on the administration's proposal. I do think, as I've said, I think that we're getting the data that we need to do our jobs, and I think it's really important that good data helps not just the Fed, it helps the government, but it also helps the private sector. People in the economy, they use this data a lot too. So it's quite important for our economy, and certainly for the Fed's work and other government agencies' work, that we continue to get better at data. That's what we've been doing for 100 years. We've been getting better and better and better. It's very hard to accurately capture in real time the output of a $20+ trillion economy. And the United States has been a leader in that for 100 years, and we really need to continue that, in my view.
Edward.
Thank you, Mr. Chairman. Edward Lawrence from Fox Business. How concerned are you with the data that we're coming in, showing no significant upward trend in inflation over the past 6 months, that the wait-and-see approach for inflation is actually giving companies cover to raise prices?
How concerned am I that say that again?
The wait-and-see approach is giving...
The wait-and-see approach, what do you mean by that?
For cutting rates. You're waiting to see if the tariffs will affect inflation. So it's a wait-and-see approach.
Well, so where policy is restrictive. When we start cutting, it'll go toward neutral.
Okay. This delay, though, where you're saying there's a one-time price increase for tariffs, which possibly could lead into bigger inflation or more inflation. Is that giving companies cover, though, to raise prices?
Well, what may be giving, it's not our policy stance, what may be giving some companies will certainly be taking advantage of the fact of the tariffs and all of the discussion of how they're going to, companies will raise prices when and as they can. And you saw it famously in the first administration of President Trump during those tariffs. Washing machines were tariffed, but dryers weren't. But what do you know? The price of dryers went up too, just like washing machines. So companies will often just they'll cross the street in a group, if you know what I mean, That'll happen. We don't see a lot of that. I mean, what we see now is basically the very beginnings of whatever the effects turn out to be on goods inflation. And, you know, I'll say again, they may be less than people estimate or more than people estimate. They're not going to be zero. Consumers will pay some of this. Businesses will pay some of this. Retailers will pay some of this. But you know, we're just going to have to see it through.
And just to follow, if I could, some additional tariffs have been in place since February, and things, you know, really haven't broken yet with the economy. So how do you justify to somebody who's looking for a house, who's facing a 7% mortgage and maybe can't afford those rates? How do you justify that? And
well, so the housing is a special case, right? We don't set mortgage rates at the Fed, right? We set an overnight rate, and the rates that go into mortgages are longer-term rates, like Treasury rates. It might be 30-year rates. It might be shorter than that, but it's not the overnight Fed's rate. It's not that we don't have any effect. We do have an effect, but we're not the main effect. There are other things, though, going on in the housing sector, and one of those is just there's kind of a long-term housing shortage that we have. We haven't built enough housing. This is not something the Fed can help with, but then that'll be the case even after things normalize. So I think the best thing that we can do for housing is to have 2% inflation and maximum employment, and that's what we can contribute to housing. There are lots of other jobs to do for the private sector and Congress, but that's what we're trying to get to. I mean, we've made a lot of progress toward that. We have a very good labor market right now. Inflation, we were very close to 2%. We're seeing some goods inflation move us away, but so far not very far away.
Chris.
Hi, Chair Powell. Thank you. Well, can you give us a little more about what kind of economic data does the Fed need to see before you'll be ready to cut? I mean, do you need inflation back nearly to target? Are there other things in the pricing that you look for? Do you need to see weakening in the job market? What kind of things are you looking for?
I mean, ultimately, it could be any of those things, right? But you know, if you saw that the risks to the two goals were moving into balance, if they were fully in balance, that would imply that you should move toward a more neutral stance of policy. This is the special situation we're in, which is we have two-sided risk to both of our goals. When we paused, inflation was above target and the labor market was pretty good. So you know, that was a time when policy was restrictive when we paused. And to be restrictive is to be supporting a return to our inflation target, right? So as the two targets get back into balance, you would think you'd move in a way closer to neutral, and that the next steps that we take are likely to be in that direction. What will it take? You know, it'll be the totality of the evidence. As I mentioned, there's quite a lot of data coming in, which before the next meeting. Will it be dispositive of that? You know, it's really hard to say. We don't make those decisions right now, so we'll have to see.
Well, I guess just in terms of inflation, though, for example, like some people would point to if it remains only in goods and it doesn't bleed over to services, then maybe that's evidence that the tariff effect is going to be a temporary one-time thing. Is that kind of thing affect your thinking, or do you just need to see the number come down closer to 2?
We'll look at everything. You know, it's, as I mentioned, you know, a pretty reasonable base case is that this will be a one-time price increase. And in the end, we'll make sure that that's the case. We're just trying to do that efficiently. And efficiently means getting the timing right, so we don't again, if we cut rates too soon, maybe we didn't finish the job with inflation. History is dotted with examples of that. If you cut too late, then maybe you're doing unnecessary damage to the labor market. So we're trying to get that timing right, and that's effectively what we're doing.
Claire.
Claire Jones, Financial Times. Just a question on the dollar. We've seen it decline quite heavily this year. I was wondering if there's been any discussion about that at the meetings and to what degree that may be complicating your attempts to get inflation back to target. Thank you.
So this goes back to the division of labor between the Fed and the Treasury, as you I'm sure know, and you know the Treasury only speaks to the dollar. it's not something that's been a topic of major discussion at all at the Fed. I wouldn't say it doesn't come up. If the transcripts, when they come out in a few years, they'll probably reflect some mentions of the dollar, but it would never be a major focus.
And just to follow on, if I may, to Andrew's question, I think the amount of imputed data in CPI now is up to 35%. I mean, is there any discussion of that as well? Is there any consideration of looking at alternative measures, data scraping and so on, in order to just ensure you've got a good read on what's happening to prices in the US economy? Thank you.
We're monitoring the situation. We do, of course, I mean, as you know, during the pandemic, we looked at a whole lot of new kinds of data. People are looking at big data sets that you can get from all sorts of places, and we do all of that. But we really need, the government data really is the gold standard in data, and we need it to be, to be good and be able to rely on it. And we're not going to be able to substitute for that, but if we have to make do with what we have, but I certainly hope that we get what we need.
Jay O'Brien.
Hi, Mr. Chairman. Jay O'Brien, ABC News. President Trump has obviously invoked your name a lot. He has personally pressured you. Are you concerned the way that conduct might impact the Fed's independence going forward?
I'll just say that, I think that having an independent central bank has been an institutional arrangement that has served the public well. And as long as it serves the public well, it should continue and be respected. If it didn't serve the public well, then it wouldn't be something that we should just automatically defend. But what it gives us, and other central banks, what it gives you is the ability to make these very challenging decisions that in ways that are focused on the data and the evolving outlook, the balance of risks, and all the things we talk about, and not political factors. And so governments all over the advanced economy world have chosen to put a little bit of distance between direct political control of those decisions and the decision makers. So if you were not to have that, there would be a great temptation, of course, to use interest rates to affect elections, for example. And that's something that we don't want to do. So I think that's pretty widely understood. Certainly it is in Congress. And I think it's very important. I'll just say that.
Maria Eloisa.
Afternoon, Chair Powell. Maria Luisa Capurro from Bloomberg News. You mentioned a slowdown in consumer spending, and I wanted to see if you could walk us through what was the discussion with the committee around that. We've seen delinquency rates rising for upper-income households. How do you see that evolving in the next few months, and how much of a vulnerability that is for the economy going forward?
Consumer spending had been very, very strong for the last couple of years, and had repeatedly, forecasters, not just us, had been forecasting it would slow down, and now maybe it finally has. So I would say, if you talk to credit card companies, for example, they will tell you that the consumer's in solid shape and that spending is at a healthy level. It's not growing rapidly, but it's at a healthy level. And delinquencies are not a problem. You mentioned high-end delinquencies. I don't know what to make of that. I read the same thing. But so generally, and if you look at the banks, and when the banks talk about in their earnings calls, the performance of credit has been good. So essentially, you have a consumer that's in good shape and is spending, not at a rapid rate, but it's true. And it was, again, right in line with what we expected. The GDP data that we got this week. And I think it's still a little bit difficult to interpret because you have these massive swings in net exports, which may also be affecting, some of that can affect consumer spending as well. Look, it's one of the data points that we pay most careful attention to, and there's no question that it's slowed. And we're watching it closely, but we also watch the labor market and the performance of inflation. Those are our two variables that we're assigned to maximize.
And just to follow up on what my colleagues were asking about this dissent, Governor Waller said that the labor market is on edge, and he was pointing to weaknesses on the private sector. I was wondering, you've said that the main number to look at is the unemployment number overall, but what was the discussion about the state of the private jobs market?
So I'm not going to talk about any individual's, any individual's comments. I wouldn't do that. But look, I think what we know is that private sector job creation, certainly in the last report we'll see on Friday, but had come down a bit. And if you take the QCEW adjustment seriously, it may be even lower, maybe close to zero. But the unemployment rate was still low. So what that's telling you is that demand for workers is slowing, but so is the supply. So it's in balance, oddly enough. You've got a very low unemployment rate, and it's kind of been there for a year as job creation has moved down. But also we know that, because of immigration policy, really, the flow into our labor force is just a great deal slower. And those two things have slowed more or less in tandem. If you look at things like I mentioned, quits, look at wages. Wages are gradually cooling. Look at vacancies to unemployment. Those things have been pretty stable they haven't really moved a lot in a full year. So I think if you take the totality of the labor market data, you've got a solid labor market. But I think you have to see that there are downside risks. You don't see weakening in the labor market, but I think you've got downside risks in a world where unemployment's being held down because both demand and supply are declining. I think it's worth paying close attention to it, and we are.
Nancy.
Hi, Chair Powell. Nancy Marshall-Genzer with Marketplace. One more question on the lack of unanimity in today's decision, the two dissents. Was there talk during the meeting? I know you're not going to talk about exactly what individuals said, but in general, was there talk during the meeting of cutting rates, and what was the case against that at the meeting?
Sure. So, we have an economic go-around where people talk about the economy, and then that's yesterday, and then today we have a monetary policy go-around. All the way around the table, everyone gives their views. So the discussion around policy was, the majority view was still what it has been, which is that inflation's running above target, maximum employment is right at target. That means policy should be a little bit restrictive, somewhat restrictive, because we want inflation to move all the way back to its target. So that's where people have been and still are. Two of our members felt that the time had come to cut, and that they, for the reasons that they're going to express, I won't tell you the reasons they'll issue some kind of a thing in the next day or so. So, but that's the story, and I would say, well argued, very thoughtfully argued all around the table, good arguments, and it's a situation where, unusual situation. The economy is in good shape, but it's an unusual situation where you have risks to both your employment mandate and your inflation mandate. That's the nature of a supply shock. And it's probably not surprising that there would be differences and different perspectives on that, as well as different views of where the neutral rate is, so that different views of how tight policy is. So we have those. I will say what you hope is that people, explain their positions very thoughtfully and clearly, and we absolutely had that today, all the way around the table. I would call it one of the better meetings I can recall from that standpoint.
And you've said you're waiting to be confident inflation is heading toward your 2% target before you start cutting rates. When you do get that confidence, would you be in favor of lowering rates right away?
It's not quite the way I would put it. I said that's why we think policy should be restrictive, is because inflation is above target. When we have risks to both goals, one of them is farther away from goal than the other, and that's inflation. Maximum employment's at goal. So that means policy should be tight, because tight policy is what brings inflation down. If you came to the view that the risks to the two were more in balance, that would imply that policy shouldn't be restrictive. It should be more neutral, a neutral stance, and that would be somewhat lower than where we are now. No one knows exactly where that is. So that's the framework I think I'd be taking. And, we'll just have to see. We're going to be obviously looking at a lot of data in the next cycle. It is one of the cycles where we have 2 employment and 2 inflation reports, and we'll see where that takes us.
Jeff Cox.
Thank you, Mr. Chairman, for taking the question. Jeff Cox from CNBC.com. A metric that you like to cite a lot is the final sales to private domestic purchasers. That was down to a 1.2% gain in second quarter from 1.9% in Q1, suggesting that there's some softening in underlying demand. I just wondering if you look at that, you combine that with some of the housing numbers, the weakness that you acknowledged at the top of your remarks that the housing market is in fact weak, and the inflation numbers from GDP today came down to 2.1% for headline, 2.5% for core. I'm wondering how much more movement you would need to see from these data points before you would be comfortable with cutting in, say, September.
It's going to be the total. Hard to answer that specifically. PDFP, I think, for the first half, private domestic final purchases, or final sales, as people call it, was 1.6 on the first half. GDP, I believe, was 1.2%. That's the whole half. You mentioned the quarters. So those are slower, but GDP is bumpy quarter to quarter, half to half, and often gets revised, after the fact. The labor market data we still think is continue to think is the best data we have on the economy, and that shows a 4.1% unemployment rate. It shows wages, still at a healthy level, but moving ever closer to what we would regard as long-run sustainable, consistent with longer-run productivity and 2% inflation. So the labor market is actually still quite solid. Inflation is above target, even ignoring tariffs. It's a little bit above target, and tariffs. So we're watching all of that, and again, trying to do the right thing in what is a challenging situation, because you're being pulled in 2 directions, and you have to decide which of those to go in. And actually, at some point, if they're sort of equally at risk, then you really want to be at a neutral policy stance, which we're not right now.
So it'd be safe to say that if the data kind of stays in line with where it is right now, that you wouldn't be comfortable with cutting in September?
I'm not going to say that. No, I just think we're going to need to see the data, and it can go in many different directions. The inflation data and the employment data, and we're going to make a judgment based on all of the data and based on that balance of risks analysis that I mentioned.
Thank you.
Greg, Rob, for the last question.
Thanks, Chair Powell. Greg Robb from MarketWatch. The Treasury Secretary has said recently that it would be confusing for the markets if you stayed on as a governor after your term as chair ends. And I was wondering if you had any update for us on a decision on that front.
Sorry, I do not have any update for you. Thanks very much, everyone.
Okay, so that is the Jerome Powell FOMC decision. Now, Powell was incredibly hawkish, I thought. He refused to say whether there was even a chance we'd cut in September or whether he thought we would turn. He was basically touting inflation the entire time and incredibly hawkish. Honestly, and to a certain extent, I disagree with Powell. I think that with rate decisions, excuse me. I think with rate decisions, you have to be proactive. I think we should have certainly at least ended the QT by now, but he's worried about inflation. And so I get it, but I thought he was much more hawkish than I thought he would be. I mean, I think a lot of people expected him to be a little bit dovish as balance, but see what happens here. Very interesting Powell, hawkish Powell. So yeah, really interesting here. Up here now. Dollar index spiked on this news, of course, and yeah, very interesting. Hawkish Powell. The president is not going to be happy with this at all. President is definitely not happy about this. And yeah. Yeah, he is not happy at all about this. Again, guys, in 45 minutes, we do have some pretty big earnings going live too. We have Microsoft and Meta earnings going live, so don't go anywhere. Again, if you want to help support your boy here, check out TopStep. TopStep gives you a 50K demo. They test your skill with it. You pass the test, they fund you. You fail, you only lose what you pay for it. The base one's $50 a month. That way, if you don't lose your tail day trading like most day traders end up doing. Most day traders lose money, and so yeah, most day traders are going to lose money over time. And so if you limit your risk with TopStep, you lose $50 per account. It's not the end of the world if you fail, and it's just a great way to learn. I'll put the link up if you want to help support the channel. No PDT rule on futures. Get you around the PDT rule as well. Allows you to get started for $50 a month. You can see a pin at the top of the chat as well. They're an affiliate or sponsor of mine, but I'm biased. But yeah, interesting for sure. What do you guys think? Do you guys agree? I'm gonna do a poll real quick. Do you agree with Jerome Powell's tone today? I'm really genuinely curious. I'm doing a poll right now. Do you agree with Jerome Powell's tone right now, today? Yes? No? Let me know in chat right now, too. Do you agree with Jerome Powell's tone? Vote. I'm genuinely curious to see it. I think most people are probably going to disagree. Even I'm not the most dovish person, but even I kind of disagree with the tone a little bit. We got a fake Jerome Powell in chat. Yeah, so interesting. Agree. I mean, I understand in worrying about inflation. Okay, but I think there's more things you can do to balance it. I think we're somewhere in the middle. And so I think there's more things you can do to balance it. I think we have to recognize restrictive too long is bad. And, you know, I'm neutral. And, you know, a lot of people, like, they like to say I'm on either, like, one side of the political spectrum. I'm really not. I'm very neutral. I'm a capitalist. I don't want inflation to spike, but I also don't want us to enter a recession necessarily. Anyway, I guess I'd rather us enter a recession than inflation spike, in all honesty. But I don't think either of them are good. And while I understand some of what Powell's saying in terms of, like, we don't really have the economic weakness to justify it, I get it. But I also think at a certain point you have to be proactive, and I think a negative GDP print is bad. Here's gold. Gold on here. So, yeah, I think we're somewhere in the middle, somewhat ambiguous, but I think you could probably argue cut at this point in time, but who knows, man. Again, looking at our poll, I just want to see what the poll shows here for this. There we go. Raise this. Again, in 40 minutes, we got Microsoft and Meta earnings. All right, looking at our poll, we're almost 50-50 split out of hundreds of votes. Almost 50-50 split, which is really interesting. 49 to 51%. I don't know if we could be more split than that. I mean, 50-50, of course, but still. There's nothing else Powell can do unless Congress gives him more tools. Copper down 20%. Yeah, well, there's been some news that come out about outside of Powell. This is the news that's making copper tank. U.S. Commerce Secretary by June 30th, 2026 will provide update on domestic copper markets. Trump will evaluate whether to impose phased universal import duty on refined copper of 15% starting January 1st, 2027. So copper's probably down because they pushed this back a little bit. This is deeper into the future. And so copper's probably reacting negatively because it's going to open up the market a little bit more short term for it. It's probably what's going on here. I'm not the biggest copper guy. I don't really watch copper that heavily, but that's, if I speculate on everything, that's what seems to be most logical. Let me know if I'm wrong. Yeah, market really reacted negatively. I think this is because most people expected a a dovish Powell, but a pause today, signaling opened the door for a cut in September. And so Powell being as hawkish as he was, yeah, I mean, that's kind of a shocker. And I think I think a lot of people expected that. I think a lot of people expected that. I think there's a lot of political bias on both sides. I think people on the left, they're going to agree with Powell just because Trump dislikes Powell. And so just because of that reason, people are going to agree with him. And I think people on the right, they're going to agree with the president just because Jerome Powell dislikes the president. And so, you know, and the president doesn't like Powell. And so I think both sides are just kind of, you know, I think we're somewhere in the middle, but I do think he could have been a little more dovish today. But again, maybe he sees more risk to the tariffs than expected. Yeah, if you look at rate cut odds, just throw this up here real quick. If you look at rate cut odds, we're looking at 98.2% likely. I mean, I don't know how that changed. The odds of a September cut have decreased. Now the minority here, the odds of September cut are now only 47% probability of a September cut now versus a 52% chance of a pause again in September. So the odds of a cut have decreased dramatically for next September, or next meeting in September. It is now less than 50% odds of a cut in September. It's not the most probable majority here. So, yeah. Yeah, I mean, maybe that's 277. A bull market this cycle, rate cut odds went down. Yeah, for sure. Gold, on the other hand, decreased dramatically with markets as well. If you take a look at gold here, gold is down to 33.25s. I did make some money on my funded account here on this one. So I am green on my funded account. I'm green on both accounts, to be honest. I actually got a little bit above target on this combine, and so I ended up losing money on purpose to get back. I'm up 1,600 in this one. It's a challenge account. On my funded account, we got into some good trades. You can see those here. Way to make... Is there a way to fix this to where I can see my actual trades a little bit better? Yeah, but we made some money. We made a little bit of money. And again, now we're about to head into Microsoft Meta earnings, going live at 4 p.m. Eastern Standard Time. They're going live pretty soon, 35 minutes or so. John, dump now through August. I don't know. We're still pretty close to all-time highs, even with this dip. This dip is not like end of the world dip in it for any reason. All right, like this is, or by any means, this is not an end of the world dip yet. Now, here's a story here, okay? In about 35 minutes, we have Meta Microsoft earnings going live. 35 minutes, Meta Microsoft earnings. In 24 hours, in less than 24 hours, we have PCE inflation data. And so if what Powell is saying today is true, which is that inflation is the risk, we could see PCE inflation elevated tomorrow at 8:30 Eastern Standard Time. So tomorrow morning we have PCE inflation. We also have jobless claims, unemployment. Powell said one of the more important things was employment or unemployment. And so tomorrow we have jobless claims, unemployment filings. How many people are filing for unemployment week to week? A more real-time look at unemployment, as well as we have payrolls Friday, followed by non-farm payrolls and unemployment report. So we have payrolls and non-farm. We have non-farm payroll and unemployment report on Friday at 8:30 as well. So we're about to see how weak the economy is, how weak jobs are, what the unemployment rate looks like in a more detailed way, as well as where inflation is. And so again, also guys, listen, I need like 15 followers on x.com at Beginner Trades. We still have what, 1,000 plus here? Yeah, we got 1,300 viewers still. And so if you haven't already, subscribe, hit the notification bell. Give me a follow at Beginner Trades on x.com. At Beginner Trades on x.com. Great way to help support the channel. Here's the link if you want to help support your boy here in this channel. I appreciate it. There's the link right there. I need, like, what? How many of you guys I need? I need 17 of you guys that, you know, we got 1,400 here. I know some of y'all have X. Give me a follow. Try it one time. Might feel good. Do it now. Give me a follow at Beginner Trades. BEGINNERTRADES at Beginner Trades. Do it now. I appreciate you guys. We cover all the breaking news. If you scroll down, we cover all this stuff. GDP data this morning, 3%. All right, guys. Anyways, Meta, Microsoft today, Amazon tomorrow. Is Amazon tomorrow? What's tomorrow? Hold on. Amazon earnings are tomorrow. Yeah, so we got Microsoft, Meta today, Amazon tomorrow. As soon as we end the stream, that it should immediately pivot you to the Microsoft Meta stream. So as soon as we close this one, it should immediately bring you to the new one. All right, so do it now. Subscribe, hit the notification bell. Again, as soon as I close the stream down, it should immediately bring you to the Microsoft Meta stream. So stick around. We're going to cover that right at the closing bell. Be ready. Let me make sure it's going to redirect you. It should. As soon as we close this, it should redirect you straight there. So, yeah. See you guys over there. Again, don't go anywhere. Check out Top Step if you want to help support the channel. No PDT and futures. You can day trade S&P, NASDAQ, Dow, Russell. Get you around the PDT rule. You can get started for $50 if you pass the test. 50K funded account, 90% split. And you're probably going to lose regardless of where you go. It's a lot cheaper to lose here than fund your own account 5, 10, 20, 30 grand. And it gets you around the PDT rule. They're a sponsor of mine. I'm biased. Don't copy me. Sometimes I trade and lose off stream. Understand CFTC 4.41, hypothetical or simulated performance have limitations, guys. With all that said and out the way, I'm going to pivot over to the Microsoft and Meta stream because those earnings drop in about 30 minutes. 30 minutes. Don't go anywhere. It should automatically redirect you to that stream. It should automatically redirect you. So don't go anywhere. If it doesn't, for whatever reason, here's the link to that stream right now. So if it doesn't bring you there, like it should, here's the link to the Microsoft Meta stream right here. I'll put it up in chat. GDP data 3% GDP versus 2.5 expected, better than expected. Also, we have Apple tomorrow, so Amazon and Apple tomorrow. Busy day, guys, busy day. I'll see you guys over there. Again, it starts, the earnings drop in about 35 minutes, but we're going to stream live now. I'll see you guys over there.